So if I want to calculate the price of a bond, it will be basically the present value of all the future cash flows, which includes coupon, which is the interest, plus the principal value, which is the terminal value. And when I am calculating the present value, I basically discount all these future cash flows with a rate. And this interest rate, if that is going down, basically my value of every cash flow will increase, and that's why the price of the bond
because your denominator, the division thing जिससे कर रहे हो, वो कम हो रहा है, तो आपका overall value numerator में
correct. And which is why like price of the bond will go up. How does the currency risk work, and currency जो change होती है, appreciate, depreciate, how does that affect the stock markets?
$50,000 की सैलरी अमेरिका में roughly 10 लाख के बराबर है इंडिया में in terms of purchasing power. Even though an iPhone may be roughly the same price, adjusting for taxes or tariffs etc., your haircut is not.
अगर एक कंट्री की करेंसी डेप्रिशिएट हो रही है तो उसके एक्सपोर्ट्स मोर कॉम्पिटिटिव हो जाते हैं. अभी जैसे रूपी डेप्रिशिएट हो गया, रूपी डेप्रिशिएट हो गया 120 मान के चलता है, $1 120 हो गया, तो यही सेम प्रोडक्ट जो है अभी
67 सेंट्स का हो गया.
So that's why US के लिए अभी ये सेम प्रोडक्ट जो है वो
सस्ता हो गया.
That's why exports will become more competitive because US के लिए अभी ये सस्ता हो गया. What is the meaning of de-dollarization?
You can have multiple reserve currencies in the world. Dollar may remain the most important for some time, but there is no intrinsic reason in a Chinese economy which is larger than Indian economy, and once the Chinese yuan appreciates, it will start catching up with the US economy in dollar terms. As India grows much larger and slowly opens its capital account, you could have 2-3 reserve currencies in the world by 2035, 2040.
And about the US-China trade war which is happening right now, what are like some of the industries or products that you think will have a lot of advantage? वीडियो देखने से पहले मेरी एक रिक्वेस्ट है आप सबसे. मैं YouTube एनालिटिक्स देख रहा था एंड वहां पर देखा कि 82.6% ऑफ माय ऑडियंस हु इज वाचिंग दिस कंटेंट हैज नॉट सब्सक्राइब टू द चैनल. अगर मैंने आपको थोड़ी सी वैल्यू प्रोवाइड की होगी एंड आपको अगर कंटेंट बहुत अच्छा लग रहा है, आई रिक्वेस्ट ऑल ऑफ यू टू प्लीज हिट द सब्सक्राइब बटन सो दैट वी कैन ब्रिंग यू द बेस्ट क्वालिटी ऑफ गेस्ट एंड गिव यू द मैक्सिमम वैल्यू पॉसिबल. थैंक यू सो मच फॉर सब्सक्राइबिंग टू आवर चैनल एंड एंजॉय दिस एंटायर एपिसोड ऑफ कॉन्वर्सेशन विद कुशल. सो इसको अपन ऐसे रखते हैं लाइक आई वांट टू डीप डाइव इनटू इन्वेस्टिंग एज वेल एज जियोपॉलिटिक्स, एंड I've seen so many of your interviews, like you have abundance of knowledge, and secondly आपके books भी जो इतने best sellers है, and it was also endorsed by honorable prime minister, so books पे भी like थोड़ा discuss करना है. So firstly एकदम macroeconomic viewpoint से अगर बात करें, you have been an investor and you have also been like a very you've also been into macroeconomics and all. तो एकदम broad basis पे macroeconomics और stock markets ये दोनों चीजें कैसी चलती है, और macroeconomics की जब मैं बात कर रहा हूँ, it's like currencies, interest rates, बहुत सारी चीजें होगी, तो एक एक चीज करके stock market के साथ कैसे relate करते हैं उस पर बात करते हैं.
देखिए एकदम शॉर्ट टर्म में फर्स्ट ऑफ ऑल बहुत इंपॉर्टेंट सवाल है, बहुत जरूरी सवाल है. एकदम शॉर्ट टर्म में कोरिलेशन होना जरूरी नहीं है. इनफैक्ट इन सम कंट्रीज मीडियम टू लॉन्ग टर्म में भी कोरिलेशन होना जरूरी नहीं है. बट वी कैन से फॉर मोस्ट इकोनॉमीज ओवर द मीडियम टू लॉन्ग टर्म देयर शुड बी सम सिग्निफिकेंट कोरिलेशन बिटवीन, फॉर एग्जाम्पल, इकोनॉमी की ग्रोथ, जिसको हम जीडीपी ग्रोथ बोलते हैं, एंड द स्टॉक मार्केट का रिटर्न्स. एक ऑब्वियस उसका जो एक्सेप्शन है, लेट्स स्टार्ट विद द एक्सेप्शन एंड देन गो टू द नॉर्म. एक ऑब्वियस एक्सेप्शन उसका फॉर एग्जाम्पल चाइना रहा है. चाइना इन द लास्ट 20 odd years has seen remarkable GDP growth rate. Despite the recent slowdown in the last 4-5 years, it still has a higher CAGR in dollar terms compared to, say, the Indian GDP, but a significantly lower return in the stock markets.
कितना होगा CAGR?
I think that last 20 years CAGR in dollar terms might be like 9-10%, something like that, 10%, probably a bit higher actually. And despite that, their in broad indices like Shanghai, Hang Seng, etc., have been broadly flat for a long time. And the reason is equity market, for example, हम investing की बात करें, of course, debt market investing अलग होता है, real estate investing अलग होता है, but equity market investing की बात करें, तो it's not just growth, it is also ROE, return on equity, जिसको हम बोलते हैं. क्योंकि जैसे आपने CA किया है, मैंने CFA किया है, जो लोग कॉमर्स या इकोनॉमिक्स के स्टूडेंट्स हैं जो MBA कर रहे हैं, we all know, right, there is a cost of capital. In fact, technical term है weighted average cost of capital, right? हम debt का आपका equity का cost है, some tax adjustments are there. There is a cost of your company in terms of the input of finance. So you only create real shareholder value if you have return on capital which is clearly and consistently in excess of that. Consistently need not mean every year, there can be a cycle. But because the Chinese economy has traditionally been state dominated, उसमें भी बहुत सारे नुएंसेस हैं आपके, कुछ पहले प्राइवेटाइजेशन भी हुआ था, अभी भी उनकी कुछ लीडिंग टेक कंपनीज प्राइवेट हैं, बट बाय एंड लार्ज दे हैव बीन स्टेट डोमिनेटेड. Because they are state dominated, their main aim is not shareholder value maximization. Their main aim is throughput, is output, is quantity. So China is a very major exception in today's world, where if you take 20-year kind of view on their GDP and the stock market, उनका आपस से कोई correlation नहीं. 20-year is also useful because we'll come to it later. 20-year is long enough to have a full dollar cycle, etc., etc. 10-year can sometimes be misleading for large economies. 20 years is large enough. So 20 years में China is an exception, but China को छोड़ के अगर आप देखो, India has been clearly the second fastest growing major economy over the last 20 years. Now, of course, it is the fastest growing major economy. In the last 5, 7, 8 years, has overtaken China in growth. India may, quite surprisingly, the correlation is quite strong. Over 20, 25 years, 20, 22, 23 years, if your nominal GDP has grown at 12% or so, your stock indices have broadly grown at around 12, 13% or so. And India, it's not so surprising because India is relatively private sector led, stock market, economy, etc. PSUs are also listed, जिसको हम बोलते हैं public sector units, but they are a relatively small part of the stock market. And while there are some small cycles up and down, it's a progressively smaller part of the market. America is somewhere in the middle. There is a clear correlation between economic growth and stock market returns, but not so strong. Stronger than China, but not as strong as India. Because America, a large part of the revenue also comes from outside America. American companies are a de facto play on global growth, right? Especially the big tech companies. Europe and Japan are a classic case where the stock market returns have been more like China, but growth has been very slow. So returns have been low, growth has been low. So in that sense, India, Europe, and Japan more fit the bill. America somewhat. China has been a clear standout exception, where the government has focused more on economic output and less on return of capital to equity shareholders, etc. But by and large, over medium to long term, there should be some correlation, because ultimately, अगर economy बड़ी नहीं होगी, sales बड़ी नहीं होगी, तो cyclically adjusted profit भी बढ़ेगा नहीं. Profit नहीं बढ़ेगा तो आपका stock price कैसे बढ़ेगा? उसमें caveats ये आ जाते हैं कि जहाँ पे they are not focused on return on capital, they will increase the share count. And ultimately, you and I, when we invest in the stock market, हम जब कोई share में invest करते हैं, we don't care about total earnings. We care about earnings per share. So if you end up diluting the share count, if you end up issuing new shares all the time, then even though the overall profit of the business may increase a lot, the per share profit may not increase that much, and therefore the stock price may not increase that much. So मैं सॉरी आपको थोड़ा लंबा जवाब दे रहा हूँ, बट इसका असली उत्तर यही है कि जनरली देयर इज कोरिलेशन, मीडियम टू लॉन्ग टर्म मोर लाइकली, बट देयर आर क्लियर एक्सेप्शंस लाइक चाइना.
गॉट इट. एंड इसमें आप बोल रहे हो तो बेसिकली ईपीएस जो है वो अगर बढ़ गया, सॉरी ईपीएस में बेसिकली अर्निंग्स पर शेयर, अर्निंग्स अपॉन नंबर ऑफ शेयर्स, तो आप शेयर्स बढ़ाओगे तो बेसिकली ईपीएस आपका कम हो जाएगा.
जी, डाइल्यूट हो जाएगा.
एंड दैट्स व्हाई लाइक प्राइस इज डिपेंडेंट ऑन द अर्निंग्स पर शेयर एंड नॉट ओनली द प्रॉफिट.
बिकॉज आप तो एक शेयर खरीदा, फॉर एग्जांपल आपने, या 100 शेयर्स खरीदे, 1000 शेयर खरीदे, कंपनी के थे टोटल 1 करोड़ शेयर. अब उन्होंने ओवर 10 इयर्स 1 करोड़ से 1.5 करोड़ के 1.5 करोड़ कर दिया. सो दैट्स अ 4% ऑन एवरेज एनुअलाइज्ड डाइल्यूशन. तो उनकी अगर अर्निंग्स बढ़ रही थी 8-9% से, तो ईपीएस तो उसका फिर सिर्फ 4-5% से बढ़ा. राइट. सो इट्स नॉट जस्ट द टोटल प्रॉफिट, इट इज हाउ कैपिटल एफिशिएंट यू आर. डिड यू हैव टू इशू न्यू शेयर्स? Indian companies, भी कुछ companies, for example, smaller banks which are fast growing, smaller NBFCs, they also issue new shares, but then they grow so much faster that on EPS it is still respectable growth. So there's no law or no ethics or no concept against dilution of share count, but what really matters is EPS. So अगर dilution helps you, but you're still getting a good CAGR, what is known as compounded annual growth rate, on earnings per share, even after dilution, if that number is healthy or respectable, then it's fine if it works for that particular business model. But for a share price, the EPS is what matter and not the total PAT, not the total profit after tax. So that the Chinese model being somewhat different, more state-led, was an exception. But by and large, India, Europe, Japan have followed it. America also follows it, but you have to then adjust to the fact that 30 to 40% of S&P 500 revenue comes from outside the US. And therefore, it's not just a play on US GDP growth rate. So, आप उसको adjust करोगे, then that also kind of fits into the model.
Now, talking about interest rates and bond yields as the other macroeconomic indicators, इसका impact जो होता है, ये changes का क्या impact होता है, and how are stock markets reacting to these indicators?
See, what is interest rate? Interest rate is the cost of capital, right? It is the rental yield of money, so to speak. कि अगर मैं आपसे 1 करोड़ रुपए उधार ले रहा हूँ और मैं आपको 1 साल बाद देता हूँ, then long story short, I have to give you 1 crore 10 lakhs because that is the cost of money for you having lent to me. उसमें आपने मेरे के साथ कोलैटरल लगाया नहीं लगाया, क्या रिस्क एडजस्टेड, लेट्स लीव दैट डिटेल असाइड फॉर अ मोमेंट. इट इज जस्ट द कॉस्ट ऑफ मनी. व्हाट इज एन इक्विटी? An equity is unlike debt, where I am obligated contractually, legally, to give back some money along with some interest unless I declare bankruptcy. So long as I'm solvent as an individual or as a corporate organization, I am supposed to give that money back with some interest. That is debt, and that extra money is interest. The original money is principal. Equity means I give you some money, you're not obligated to return me that money. Now I own an X percentage of your business. Let's say I own 1% of your business. If you declare a dividend for your common shares, let's say 100 crores, I own 1% of your business. Therefore, then I can say you owe me 1 crore. But you can, at the board level, not decide to have any dividend. And I cannot do anything about it. The reason people still invest in equity is because for stable, large businesses or businesses where you can trust the corporate governance, you understand unki earnings आज इतनी पे है, कल इतने पे होगी, and therefore it's a growing, if theoretically that cash could come back to me, it is growing faster than the cost of debt interest. And that money, because it's growing faster, but it is riskier, a lot of people who invest in debt don't want to invest in equity. But those who are ready to take that risk can give you a certain multiple of it. So आपका आज 100 rupees, मैंने कहा 100 crore का dividend है. Let's say next year 120 crores. That 120 crore dividend is backed by 300 crores of profit. And therefore I can put a multiple on that business, say the business is worth, let's say 6,000 crores. 20 times 300 crores, for example. Next year it can further rise because your profits increase by 15%, which is much more than any interest. Now the relation between equity and interest rate is if interest rates, other things being equal, fall 10% से मान लीजिए 5% हो जाता है, am I ready to pay a higher multiple for that business? Yes. Why? Because जो चीज मुझे 20 times में मिल रही थी, 20 times means what? For today's earnings, for 5 rupees of earnings, I'm paying 100 rupees in the market value of the business. But let us say the risk free itself becomes 5 from 10. So then I know this is growing faster. Instead of getting a 5% earning yield, I may be ready to buy the business at a 2.5% earning yield. Because that interest जो 10 rupees था मेरा, 100 rupees originally, वो तो हर साल 10, 10, 10 मिलता, वो ग्रो नहीं कर रहा. ये 100 rupees में मैं 5 rupees अर्निंग yield में इन्वेस्ट करने को तैयार था, क्योंकि अगले साल वो 7 rupees बनने वाला था, उसके अगले ईयर 8.5, 10. Now the question is, the risk-free interest rate only has come down from 10% to 5%. Therefore, any cash flow stream has become more valuable for me. Because मुझे कुछ नहीं करते करते 10% मिल रहा था, अब कुछ नहीं करते करते खाली 5% मिल रहा है. So जो business already 5% दे के उतना rapidly grow कर रहा है, now I am ready to give it a higher value. So एकदम आम भाषा में बोलें, आपका जो risk free rate है, which is your interest rate generally of the government of that country, वो अगर half हो जाती है, as an example, then obviously you are ready to pay much more for risky assets which are growing. Because the equilibrium is there at a certain level. कि अगर 10% risk free है, तो मैं एक risky business में तभी जाऊंगा अगर वो मुझे कम से कम इतना दे रहा है. लेकिन अगर risk free 10 से 5 हो जाएगा, I am going to risky business even अगर मुझे थोड़ा कम दे रहा है. Right? Because you are always comparing risk free versus risky but some growth. Right? So जब risk free का rate कम हो गया, you are ready to pay a higher multiple for the risky cash stream. Therefore, all else being equal, जब interest rate कम होता है, your stock prices should go up. Now, इसमें बहुत सारे exceptions हैं, ये वो है. क्यों? Interest rate क्यों कम हो रहा है, बहुत जरूरी है. Interest rate इसलिए कम हो रहा है क्योंकि आपको लग रहा है इकोनॉमी में आगे ग्रोथ कम होगी, तब हो सकता है कि स्टॉक प्राइस उतने ऊपर ना जाए. इंटरेस्ट रेट इसलिए कम हो रहा है खाली क्योंकि इन्फ्लेशन कम हुआ, तब भी शायद ज्यादा ग्रो ना करे, डिपेंडिंग आपका इंटरेस्ट रेट का है। बट इंटरेस्ट रेट इसलिए कम हुआ क्योंकि जेन्युइनली इकोनॉमी में सेविंग ज्यादा है और इकोनॉमी की ओवरऑल ग्लोबल इकोनॉमी के अंदर एक क्रेडिबिलिटी, एक रिस्कीनेस कम, क्रेडिबिलिटी भर गई, रिस्कीनेस कम हो गया, ताकि फॉरेन कैपिटल भी आ सकता है। देन दैट इज द बेस्ट रीजन टू इंक्रीज द स्टॉक प्राइस बिकॉज इंटरेस्ट रेट कम हुआ। तो इंटरेस्ट रेट क्यों कम हुआ भी डिपेंड करता है, क्योंकि कई बार क्या होता है कि खासकर डेवलप्ड इकोनॉमीज में इंटरेस्ट रेट इसलिए कम हो रहा है क्योंकि ग्रोथ स्लो हो रही है। क्योंकि एक होता है नॉमिनल इंटरेस्ट रेट, एक होता है रियल इंटरेस्ट रेट। नॉमिनल इंटरेस्ट रेट माइनस रियल इंटरेस्ट रेट इज इन्फ्लेशन। एक इन्फ्लेशन कम होता है तो भी कुछ ज्यादा फर्क नहीं पड़ता क्योंकि वो आपकी अर्निंग्स में भी इन्फ्लेशन कम हो रहा है। तो इट्स वेरी कॉम्प्लिकेटेड टॉपिक, बट अगर एक हेडलाइन में आपको बताऊं तो इंटरेस्ट रेट कम होने से स्टॉक प्राइसेस ऊपर जाते हैं एज ए जनरल रूल। अब आपने शायद दूसरा करेंसी का पूछा,
बॉन्ड यील्ड्स।
बॉन्ड यील्ड्स क्या है कि इंटरेस्ट रेट तो आपने जो बोलते हैं वो जनरली होता है शॉर्ट टर्म, मतलब लिटरली जो ओवरनाइट मनी हम बोलते हैं। जैसे आज आरबीआई ने उसको 6% पे किया हुआ है, उसने 6.5 पे था, उन्होंने 2 बार 25 बिप्स काटे, अभी वापस काटना चाहिए, इन्फ्लेशन नंबर कम आया था। तो वो शॉर्ट टर्म रिस्क फ्री इंडिया का एक तरीके से 6% हो गया रुपी में, क्योंकि अब गवर्नमेंट ऑफ इंडिया अगर आपको 6% देने को तैयार है तो हु कैन बी मोर क्रेडिबल देन द गवर्नमेंट? Government has the police, has the courts, has the army. If government only is not keeping its contract, an unthinkable thing in today's age of capitalism, then what will a private person do, right? So that becomes the base layer. Now, bond yield jo pucha, bonds are generally also debt. Government bonds yields are also government, you can have corporate yields also. But government bonds are different from what is generally known as government bills. It's very American language, but T-bills, for example, are short-term bonds. A bond can be longer, like a 10-year bond. So for example, India का 10-year rate अभी शायद 6.4 चल रहा है, 6.37. So it shows that India's yield curve, मतलब 1 महीने का ब्याज, 3 महीने का ब्याज, 1 साल का, 5 साल का, 10 साल का, उसको yield curve बोलते हैं। ये रफली फ्लैट है। कुछ कंट्रीज का ऐसे होता है, कुछ कंट्रीज का ऐसे होता है, जिसका डिक्लाइनिंग होता है as time goes on, they are likely to sometimes it's known as inverse yield curve, likely to cause a recession. But let's come to that later on. इंडिया में इट सिंपली शोज दैट अगर मैं गवर्नमेंट हूं और मैं 10 साल के लिए बाजार से पैसा ले रहा हूं तो मुझे 6.37% देना पड़ रहा है। A 10-year yield is a better proxy for stock prices because बिजनेसेस तो 10-20 साल तो रहने चाहिए ना। अगर आप आज एक बिजनेस को एनालाइज कर रहे हो, उसका कैश फ्लो यील्ड निकाल रहे हो अपने एक्सेल शीट पे, उसको एक डीसीएफ कर रहे हो, एक एनपीवी कर रहे हो, एक एपीवी कर रहे हो, तो आप एक यू आर ट्राइंग टू गेस द वैल्यू ऑफ दिस बिजनेस टुडे।
एपीवी क्या होता है?
इज एडजस्टेड प्रेजेंट वैल्यू, इज अनदर फॉर्म ऑफ नेट प्रेजेंट वैल्यू। वो एंटरप्राइज वैल्यू से नेट डेट माइनस करके it comes. Instead of using WACC, we just use return on equity there.
Okay.
It's just another form of DCF. So if you're doing any of these measures, then generally the business will at least remain for 10 years. Then you'll have a terminal value beyond that. So generally investors use 10 years to get a sense of the medium to long-term cost of capital. In fact, some investors say, I personally feel we should use 30 years. Because if your business is not likely to last for 30 years, is it really worth investing in? उसका terminal value बहुत कम हो जाता है. But anyway, 10 year is a convention. तो 10 year is just the bond yield, and उसका short term version को आप bill yield बोल लो या risk free interest rate short term बोल लो. In the case of India, वो roughly same ही है, 6 to 6.5%. It need not be the case. For example, America में अभी short term rate थोड़ा कम है. I think I forgot 3.75 ऐसा कुछ हो गया है. Whereas 10 year is 4.3. 30 year almost went to 5 a couple of weeks ago. Now it's 4.7, something like that. It is a very normal steep yield. यही yield अमेरिका में 1-2 साल पहले थोड़ा सा inverse था. When people were predicting recession, actually हुआ नहीं. This also shows कि economics of physics, economics of finance में एक important बात ये है कुशल की इसमें जो patterns होते हैं वो pattern probability होती है, वो certainty नहीं होती. It is something, it's a concept, it's not a formula. तो बहुत जरूरी है कि इकोनॉमिक्स ऑफ फाइनेंस में वी डोंट हैव फिजिक्स एनवी, वी डोंट हैव मैथ एनवी. तो इसमें कुछ भी मैं आपको जो बता रहा हूं उसमें सब में कोई ना कोई एक्सेप्शन है. दिस इज ब्रॉड पैटर्न्स, नन ऑफ देम शुड बी सीन एज अ श्योर शॉट. अगर श्योर शॉट होता है उसको आप कंप्यूटर में डाल देते, एक एल्गोरिथमिक ट्रेडिंग फंड बन जाता, फिर दैट वुड हैव बीन द वॉरेन बफेट ऑफ द डे, राइट? सो दिस इज a lot of this is human judgment because economics is about how humans individually and collectively respond. Finance, behavioral finance की जो हम बात करते हैं, and there's a lot of emotion involved, which may or may not be rational, depending how you define rational. So, long story short, GDP growth से stock market generally higher the GDP growth rate, higher the stocks. Generally lower the interest rate, higher the stocks.
एंड आप जो बोल रहे हो बॉन्ड डील्स, तो बेसिकली ये आप बोल रहे हो इंटरेस्ट रेट और बॉन्ड डील्स आर लाइक सिमिलर ओनली.
Yeah, interest rate generally बोल भाषा में short term का होता है. So
Okay.
literally overnight. So if I today lend to the government, then on an annualized basis वो मुझे कितना देने का होता है यार? That's like an interbank rate or a short term. If I could somehow lend to the RBI for one day, the annualized rate is today 6%.
Okay.
But if I lend to them for 10 years, then it's CAGR of 6.37%.
Okay.
So generally, if for example US में short term bonds को T-bills बोलते हैं और longer term bonds को beyond 1 year को generally बोलते हैं T-bonds, treasury bonds versus treasury bills. वो खाली convention की बात है. Technically वो भी bond है short term वाला, but बोलचाल भाषा में उसको bills बोलते हैं. Long term वाले को थोड़ा bonds बोलते हैं.
Got it. And आपने बताया कि अगर एक inverse yield curve रहा तो that might cause a recession. तो इसका क्या रीजन है कि इनवर्स यील्ड कर्व है तो रिसेशन आ सकता है?
इनवर्स यील्ड कर्व जस्ट टू रिपीट, जब शॉर्ट टर्म आपका मान लो 7% दिखा रहा है और 10Y आपका 5.5% दिखा रहा है फॉर एग्जांपल, तो इफ यू गो फर्दर आउट, यू गो इनटू टाइम, यील्ड गिर रहा है. जनरली उल्टा होता है, जनरली इट्स एन अपवर्ड स्लोप, बट जस्ट इन केस इट इज डाउन, इट कुड पॉसिबली मीन अ रिसेशन. व्हाई? बिकॉज इट शोज दैट अभी तो इकोनॉमी ठीक चल रही है, बट 6 महीने बाद, 1 साल बाद जब रिसेशन आएगा या 2-3 क्वार्टर्स बाद जब रिसेशन आएगा, तब सेंट्रल बैंक जोर से इंटरेस्ट रेट काटेगी, क्योंकि रिसेशन आया है. तो इकोनॉमी को स्टिमुलेट करने के लिए, इन द केस ऑफ आरबीआई, इन द केस ऑफ द यूएस द फेड, in the case of Europe, ECB, in the case of China, PBOC, whatever it is, they will cut rates after some time, and therefore future rates are lower. But उसमें भी बहुत catch ये है, the reason inverted yield curve did not successfully signal a recession in the US over the last 2-3 years was the yield curve was in nominal terms. तो वो yield curve आपका ऊपर था क्योंकि short term inflation was high. Long-term inflation, people were expecting to normalize. This may now change with tariffs. We'll come to it in a bit. So, inflation-adjusted yield curve, what is known as real yield curve, was actually not inverted or not that inverted. But historically, because inflation was not so different over the short term and long term in the US, it was okay as a shorthand to say if it is inverted, it's probably leading to a recession. But what people really meant was real interest rates. Because if to stimulate an economy, real interest rates have to come down, right? अगर मैंने inflation आ गई 1% डाउन आ गई और interest rate भी 1% ही काटा, तो real stimulation तो हुआ नहीं economy का, right? Real stimulation happens if inflation comes down by 1%, I cut the interest by 2%. Then in real terms, I've brought down the interest rate by 1%, 1 minus 2. So the reason the inverted yield curve in this particular case, last 2.5 years, did not successfully signal a recession in the US as generally it would have, was because after 2022, the short-term inflation spike happened in America, which led to a short-term increase in interest rates. People assumed, the markets assumed, inflation going forward will normalize. So it was not an inverted yield curve in real terms. So that was the extra second layer analysis that was required.
Got it.
But generally, it does signal a recession successfully, generally.
And बाकी countries के case में inverted yield curve has always like signaled a recession.
See, not always. It's always a very high percentage. But again, it's nothing is 100%. But it generally does, because why else would the yield curve be inverted, right? What it is showing is that if you have an OIS curve, it's an overnight index swap curve. It's just a fancy way of saying कि if I could have 365 days, 365 on the x-axis, every day का overnight interest curve, and then have for another 4-5 years, based on the futures markets, मैं guess कर रहा हूँ market का अभी क्या guess है, हर every single day for the next 5 years short term rate क्या होगा. If you add it all up, it's a overnight index swap rate curve, right? OIS curve. Why would the markets expect that rate, the short term rate, to suddenly fall after 4 months or 6 months? Because they would expect it generally because there is a slowdown. In emerging economies, or in the case of US in 2022, a genuine reason was inflation अचानक से कम हो जाएगा. In developed economies, inflation generally remains broadly stable. So in that case, अगर inflation broadly stable है and then the interest rate is coming down, it automatically means real interest rate is coming down. The real interest rate will only come down because the market feels like economic slowdown होने वाला है जोर से. Therefore, the central bank will come in and cut rates to re-stimulate the economy. And therefore, the market is deducing that if the real inversion is there in the yield curve, it is probably a sign of the markets expecting a serious slowdown or potentially a recession.
Got it. Very, very beautifully explained. I think काफी easily आपने explain किया on the interest rate bond yield curve. So जैसे जब interest rates कम होते हैं, I also studied when I was studying economics कि interest rates अगर कम हो गए, so it will be less attractive for foreign institutional investors to park money because they'll get lesser returns. So what is the exact correlation between the interest rates and the FII investment being there?
Another excellent question, Kushal. First answer, there's no exact correlation.
Okay.
Again, by now you're seeing a pattern that there are only patterns. There is no exact correlation. India, as an emerging economy, by the way, India entered global emerging market debt indices only recently, in the last 1 year or so. So we entered JP Morgan, I think in 2024 June end, emerging market, not even the global bond indices. What it means to enter a emerging market bond index is, let's say you're a debt hedge fund manager sitting out of London or New York, and you get institutional money. You have a benchmark for your clients that I want to beat this benchmark. That benchmark now has India in it.
Oh, wow.
Which was not the case earlier. And of course, it involves a certain back office processes, certain logistical process that allows them to easily invest in and sell in India bonds, in this case, government bonds.
I think India was also part of MSCI index, the Morgan
So,
Stanley
we've
index.
always been part of MSCI for a long 25 years on the equity side. So, we opened up the equities to FIIs, or what is known as FPIs, a generation before we opened up the debt side.
Okay.
Uska bhi pros and cons hai. Technically, you want people to buy your debt, not your equity, right? Because hopefully your equity will give higher returns. But the problem with debt is you have to give it back. Equity, you don't have to. So from a risk perspective, opening up equity was less risky. From a return perspective, opening up equity first was less optimal. But we played it safe. We first opened up equity markets. Now we are opening up the bond markets, at least on the inflow side. Outflow will be the last step. So we opened up. So what has happened now, this process applies to India, whereby if we lower interest rates too much, the debt flows, other things being equal, should stop coming in to that extent. Halaki, and I'm sorry to say, there is always an exception. Usme bhi exception hai. Because if interest rates fall a lot, your long-term bonds actually become more attractive. Because when interest rates go down, your long-term bonds, the high duration bonds, see capital gains.
क्यों ऐसे क्यों होता है?
Because वही सेम थिंग राइट, आपका 10 year का बॉन्ड है, पहले 6% में ट्रेड कर रहा था, जब रिस्क फ्री आपका 6% था, तो इट वाज द फेस वैल्यू वाज 100, द मार्केट वैल्यू वाज 100. नाउ लेट अस से योर शॉर्ट टर्म बिकम्स 3%. सो बोलते हैं ना, जैसे आपने सीएफए में मॉडिफाइड ड्यूरेशन एक्सेट्रा एक्सेट्रा, that 100 will become say 150 or 160 because the cost of money became less. So anything that is now is giving 6% as a coupon becomes more attractive now than it was last year. वो 6% कूपन तो चेंज नहीं हुआ. So anything which has a steady cash flow stream becomes more attractive when the short-term risk-free rate falls.
Okay.
So actually what happens is when interest rates fall, if somebody wants to buy a long-term government bond, it may become more attractive because उसका एक momentum trade बन सकता है. But that aside, it's a general rule, when interest rates fall, foreign investors don't want to buy your debt because अगर उनको यूएस में 4% मिल रहा था और यूएस का रेट नहीं चेंज हुआ और आपके यहाँ 6% मिल रहा था, and now you are giving 5%, gap is much less. Would they want to take the currency risk, etc.? And we'll come to currency in a bit later. But other things being equal, then they don't want to buy it. But then again, your equities can become more attractive because you cut the rates. As I discussed, equities become more attractive. And historically, actually, foreign investments in India have come on the equity side. Okay. So then it's a question of empirical trade-off. ये भारी पड़ रहा है, ये भारी पड़ रहा है. There is no right answer, which is why you were saying exact correlation. I began by saying there is no exact correlation. Yeah. It depends. Will the debt slowdown be more in magnitude versus the equity inflows?
Got it.
So it's very interesting that, and there are of course other factors also. Let's not overly complicate it for the audience, but that's broadly the headline. That debt will become less attractive for foreigners. Equities may become more attractive.
I'll just try to explain the inverse correlation between interest rates and the bond prices in a
I think that's important, yes.
In a simpler manner, and I don't know, you can correct me if I'm wrong.
Sure.
So the way I look at a price of any asset is basically the present value of all future cash flows.
Yes.
So if I want to calculate the price of a bond, it will be basically the present value of all the future cash flows, which includes coupon, which is the interest, plus the principal value, which is the terminal value. Correct. And when I am calculating the present value, I basically discount all these future cash flows with a rate. And this interest rate, if that is going down, basically my value of every cash flow will increase, and that's why the price of the bond
because your denominator, the division thing जिससे कर रहे हो, वो कम हो रहा है, तो आपका overall value numerator में भाग.
Correct. And which is why like price of the bond will go up, because the price of the asset is basically the.
In fact, to put it very simply, let us say you have a perpetual. A perpetual is a infinite duration bond. For all practical purposes, let's say 100-year bond. Let us say uska coupon 6% hai. Actually, UK used to issue perpetuals called consols 200 years ago. Let's say uska 6% coupon hai. And you have a 6% short-term interest rate, risk-free. That should roughly trade at 100 rupees, dollars, pounds, roughly the same face value and market value. Now let us do a thought experiment when that 6% goes to 3%.
6% not coupon, the interest rate.
The interest rate. Coupon remains same because that has already been issued. They can't change it now. You can buy it in the secondary market, but the price to the for the bond remains the same, right? The promise for the bondholder remains the same. Now let us say that goes to 3%. A simple calculation is that $100 becomes $200. Because you are roughly getting you're getting the same coupon, but the value of it is twice. So perpetual you just can divide it by just the interest rate. For other one, you have to do slightly complicated calculation. So in this case, your $100 becomes $200. So what had happened was Austrian 100-year bonds in 2021 had gone from 100 euros to around 200 euros. And then when interest rates went up massively, they came down to 40, 50 euros.
My God.
So I was joking with a few friends that investing in Austrian long duration, ultra long duration government bonds is very similar to owning a diversified portfolio of startups. If you think about it, what is a diversified portfolio of startups? What is the general nature of startups? The general nature of startups is their profitability is way in the future. They are growing fast, but they need to burn capital. Eventually, they will become profitable. So they are especially sensitive to interest rates. If interest rates go down, startups as a category look very interesting, which is why 2021 was such a great year for unicorns in India. And 2024 was not. It's just interest rate. It's the inverse of interest rate. So, of course, I was being facile. I mean, I don't necessarily mean the Austrian long bonds the same as owning 100 Flipkarts in their infancy. But in a financial sense, they're not very different. So, it is basically a bunch of diversified startups is a long duration asset class. As opposed to a mature company which is not growing that rapidly but is throwing a lot of cash. They're a short duration asset class, right? So in a way that explains, once you understand this thing, a lot of other asset classes start making sense to us. Why was 2021 such a great year for Indian startups? In terms of every week a new unicorn was being created. And maybe last year was 2 or 3, right? It's not like Indians suddenly became less entrepreneurial. Obviously not. And this is especially true because the public markets में इतना फर्क नहीं पड़ा. Because उधर domestic money से चल रहा है. Now, gradually as the asset class of investing in Indian startups, PEVC, gets domesticated, so to speak, they will also become less dependent on foreign interest cycle. But in 2021 till first half of 2022, we were broadly at 0 interest rates. Now the risk-free in America is almost 5. अब थोड़ा कम हो गया obviously. But my point is 0 and 5 is a huge difference. 0 में you're okay with year 10 के बाद profit आना. What difference does it make in your DCF? The same discounting that you just explained. Whereas if you're doing 5%, that 5% compounds very rapidly by year 10. It really takes a big chunk of your numerator in year 10. So this is once you understand this, not just bonds, it helps you understand a lot of other assets. So growth assets in general do better when interest rates come down compared to value assets. Even though growth and value are also just a spectrum. All stocks have growth characteristics, have value characteristics. But to the extent they are more growth focused, they are likely to do better in a falling interest rate environment.
And when you say growth focused versus value focused, how do you differentiate?
It means that if you would do a DCF of both of them, year 1 to 10 and then terminal value, the growth stock will have a bigger percentage of its current value coming from terminal value. Whereas a value focused investment will have a bigger chunk of its net present value coming from year 1 to 10.
Because of dividends or?
Not necessarily dividend. Dividend may be one aspect of it,
Hmm.
because it is already more profitable but growing less fast. Whereas the growth investment is less profitable today, or maybe not profitable at all, but growing much faster.
Got it.
Because more of its cash flows are in later years, it is more sensitive to interest rates.
Got it. एंड इसका क्या मतलब होता है अल्ट्रा लॉन्ग ड्यूरेशन, शॉर्ट ड्यूरेशन, इसमें एक्सप्लेन कर सकते हो?
I mean, the technical term is a bond. Like if I buy a 1 year bond, I invest $100 or 100 rupees, I get X amount in 1 year. That's a short duration. It's not ultra short duration because you can even get 1 day, 1 week, 1 month, but let's say short duration. 10 years is a medium to long term duration. I mean, there's no hard and fast rule. Indian government issues 30-year bonds. In fact, based on insurance companies' demands, pension companies' demand, they've started issuing 40-year bonds as well. As I was saying, the Austrian government and some governments have done 100-year bonds. The British government used to do perpetuals called consols. Obviously, 30, 40, 100 years, infinite are clearly long duration. So that's what I mean.
So duration मतलब आसान भाषा में maturity of the bond कह सकते हैं?
The length of the maturity, you can call it.
Got it.
Yes.
Awesome. Very interesting. तो let's get into the currency aspect. करेंसी रेट्स जो होते हैं, लाइक आपने बताया कि अगर इंडिया में 5% है और यूएस में 4% है, फिर भी यूएस प्रेफर करेगी बिकॉज ऑफ द करेंसी रिस्क
बेस्ड ऑन ट्रैक रिकॉर्ड एक्सेट्रा.
तो क्या, लाइक हाउ डज द करेंसी रिस्क वर्क, एंड करेंसी जो चेंज होती है, अप्रिशिएट, डेप्रिशिएट, हाउ डज दैट अफेक्ट द स्टॉक मार्केट्स?
Okay, well, it's again an excellent question, also a huge topic by itself. Other things being equal, जो हमेशा रियल लाइफ में इक्वल नहीं होते, बट यू स्टिल कॉन्सेप्ट समझाने के लिए बोलना जरूरी है. अगर मान लीजिए यूएस का 2% इन्फ्लेशन टारगेट है जो एक्चुअल में है, और इंडिया का 4% इन्फ्लेशन टारगेट है जो एक्चुअल में है. यूएस का 2% का इन्फ्लेशन का टारगेट लॉन्ग टर्म में काफी क्रेडिबल रहा है, हालांकि शॉर्ट टर्म में उसकी क्रेडिबिलिटी इश्यूज रही हैं क्योंकि 2022 में इतना बड़ा स्पाइक आ गया था इन्फ्लेशन में. इंडिया का इन्फ्लेशन टारगेट की क्रेडिबिलिटी नहीं है, न्यू है, नॉट नहीं है, बट ऑफ लेट एक्चुअली स्ट्रांग हो रही है बिकॉज आरबीआई, फॉर गुड ऑफ अ वर्स, took a lot of economic pain for the country, but tried to defend the headline inflation number of 4%. Like Shaktikanta Das did not cut rates for a long time. He 4% के ऊपर था. Now finally, when food inflation has come down and your CPI headline has gone below 4, we've had 2 cuts and we may have a 3rd cut soon. एक separate debate है कि should we have seen food inflation as part of overall inflation, because food तो is more linked to weather etc, not based on what RBI does. कितना wheat उग रहा है, कितना rice उग रहा है, that's a separate issue. But the point of credibility is, are you ready to take pain? The central bank in India was ready to take pain to defend a 4% target. So what I'm saying is, let us say आप believe करते हो कि अमेरिका में broadly speaking 2% inflation रहेगा, शायद थोड़ा ज्यादा. इंडिया में broadly speaking 4% inflation रहेगा, शायद थोड़ा ज्यादा. Then other things being equal, a 2% inflation difference means every year the rupee should depreciate by 2%. Is the consequence of that logic, other things being equal. Why? मान लीजिए, just to keep the concept easy, just assume $1 is 100 rupees, right? If $1 is 100 rupees and you can exchange goods or services at a particular equilibrium price, India, wo $1, you're creating, let's say, some good, let's call that good X. वो $1 का $1.02 का कॉस्ट हो गया अगले साल यूएस में, राइट? इंडिया में वो 100 रुपीज से 104 रुपीज हो गया, बिकॉज दोनों का इन्फ्लेशन के बेसिस पे उसका कॉस्ट बढ़ गया. नाउ फॉर दैट गुड टू बी इक्वली वैल्यूएबल इन बोथ द कंट्रीज, योर न्यू एक्सचेंज रेट शुड बी $1.02 equal to 104 rupees.
Yeah.
Which basically comes to roughly $1 equal to 102 rupees now. Technically 101.9 ऐसा कुछ होगा, but 102. So you can see that other things being equal, inflation difference, जिस कंट्री की इन्फ्लेशन ज्यादा है, उस डिफरेंस से उसकी करेंसी इन रिलेटिव टर्म्स डिप्रिशिएट करनी चाहिए.
Okay.
ये क्लियर हो गया?
Yes.
Now this is just on that. Of course, the starting point is not always the same. Real life में everything else is not equal. इसमें एक और कॉन्सेप्ट ये आता है. As a country grows richer, there are 3 components on this. One was जो मैंने आपको समझाया, अब जो बोलूंगा third component में आता हूँ. So there is one what is known as relative price differences, you can call it. Second, you can call structural growth. इन सबके इकोनॉमिक इक्विवेलेंट टर्म्स भी हैं, लेकिन मैं आपको एकदम इजी भाषा में बता रहा हूँ. और थर्ड इज अ साइक्लिकल एलिमेंट. So there is a simple inflation differential, then there is a structural trend of the currency or the country, and third is a cyclical trend. इन तीनों की कॉम्बिनेशन से करेंसी डिटरमिन होती है. फिर उसका हम इम्पैक्ट सोचेंगे इक्विटी मार्केट्स या मोर ब्रॉडली मार्केट्स में क्या होता है. तो फर्स्ट पॉइंट तो आप समझ गए कि जब 2% का डिफरेंस है तो अदर थिंग्स इक्वल 2% डिप्रिशिएट करना चाहिए. सेकंड इज, आप मान के चलो, मैं आपको एक रफ एग्जांपल देता हूं. $50,000 की सैलरी अमेरिका में रफली 10 लाख के बराबर है इंडिया में इन टर्म्स ऑफ परचेजिंग पावर.
$50,000 इज 10 लाख
इन टर्म्स ऑफ परचेजिंग पावर.
हाँ, एक्चुअल नंबर होगा 50,000 into 80
42-43 lakhs
40, okay.
roughly. 10-11, that's not the point. Roughly it is roughly 10 lakhs, because even though an iPhone may be roughly the same price adjusting for taxes or tariffs etc., your haircut is not. Your haircut you can even in Mumbai get for 200 rupees at a reasonable place. You will not get it for less than $20 at a half reasonable place in New York. New York तो even ज़्यादा होगा, but even other places. When I was in college there, तभी हम $15 देते थे, almost a गाँव.
अभी मेरा फ्रेंड गया था न्यूयॉर्क में, $50 था उसका.
हाँ, तो मैं न्यूयॉर्क तो एक अलग लेवल पे हो गया, but even nothing less than $20-25. I mean, haircut is a very very obvious example, but there are many other things like child care. It's so common for people in middle class India to have domestic help. Like only the very rich have domestic help in the US, right? Because इसको टेक्निकल भाषा में अगेन इसका टर्म्स होता है, बट ब्रॉडली बिकॉज द कॉस्ट ऑफ अ ह्यूमन बीइंग्स टाइम इज मच मोर इन द यूएस. दैट्स द पॉइंट ऑफ अ रिच सोसाइटी, राइट? व्हिच इज व्हाई Uber there is much more expensive than Uber in India. Even if the car is the same. Cars generally same नहीं होती, but अगर same होता भी तो भी. Which is why जब automotive self-driving cars आएंगी, there will be a much bigger difference in pricing in the US as opposed to in India. Because India में भी of course person के time की value है, but as a percentage is not as high of the overall trip as it is in the US. So there are things which are tradable and there are things which are not tradable. Generally goods are tradable. Asterisks aside, generally services are not tradable. I'm not talking about IT services to export होते हैं. Services as in healthcare, education, haircut, etc., right? Where you have to be physically present to go somewhere. So if you do a weighted average, roughly it's around 4.5 times, at least 4 times cost of living in America compared to India. For China, for example, it's 2 times compared to America. So if you start seeing a pattern as a country grows richer, that times, the differential in the cost of living, that multiplier starts reducing. Which is China is more advanced, so China में 2 times है. Parts of Europe may be not as rich as America, but maybe definitely richer than China. Of course, much richer than India. So there the difference may be 1.3 times, 1.4 times. Right? So you're seeing a pattern. So as a country grows richer, and India is growing faster than the US in percentage terms, this 4 times also starts compressing to 3.5 times, 3 times on a structural basis. इसको इकोनॉमिक्स में बोलते हैं बलासा सैमुअल्सन, बट लेट्स नॉट गो बाय द टेक्निकल टर्म. तो वो 2% तो आपका इन्फ्लेशन डिफरेंस के कारण रुपी डिप्रिशिएट करना चाहिए. ये आपका खुद में गोइंग फॉरवर्ड अपने में 2% आराम से होना चाहिए. आई डोंट वांट टू गेट इन द मैथ ऑफ इट, वो बहुत कॉम्प्लिकेटेड हो जाएगा. बट वो आपका जो स्ट्रक्चरल इन्फ्लेशन के कारण डिप्रिसिएशन हो रहा है, because as you can understand, assuming India closes the gap in percentage terms, that 4x becomes 3.5x, 3.3x, 3.2x. So that allows the currency to appreciate, right? Because aapka $1 is actually 86 rupees on market exchange. But in terms of cost of living, it's 20 rupees. Now 20 and 86 का 4.3 का ratio है. और 20 का अगले साल 21 हो गया. 2% से भरा तो 20 रुपीज 40 पैसा हुआ एक्चुअली. बट वो 4.3 के बदले 4 पे आ गया. तो 20.4 into 4 क्या होता है? ऑलमोस्ट 82.
81.6, करेक्ट.
राइट? तो आपने देखा वो कम हो गया. इट मे बी नॉट 81%, इट मे बी 83.6, बट वो कम हो गया. दैट्स एन अप्रिसिएशन. सो देयर इज अ इन्फ्लेशन डिफरेंस. There is a structural appreciation of the poor country which is growing fast, provided it is growing fast, provided it is closing the gap. And third, there is a cyclical element on top of that, which is actually in the short term the most important element. So 2002 to 2011 was the last dollar down cycle or half down cycle. मैं 2008-9 को exclude करता हूँ, which was the global financial crisis, जब डॉलर briefly spike किया था. So people who may remember 2002 में for example despite inflation being much higher, उस समय तो इंडिया में 4% नहीं, much higher था, हम तो WPI रिपोर्ट करते थे, CPI तब था भी नहीं इंडिया में, 2011-12 में चालू हुआ CPI. WPI is wholesale price inflation, CPI is consumer price inflation. 2002 में डॉलर रुपी वाज एट 50 एंड 2007 में एक बार 40 पे आ गया था, इनफैक्ट 38 39 तक चला गया था. So it's not unheard of over 5 years for the rupee to actually appreciate in nominal terms against the dollar also, because the dollar was then in a down cycle against a basket of currencies. Then from 2011 to early 2025, according to me, it may have peaked in February, but we can come to it later on, was the up cycle, which is why despite this time lower inflation gap, the rupee kept on depreciating by 3-4%. That 3-4% was not because of the inflation gap or the structural thing remained. Inflation gap came down, but the cyclical component was a headwind for USD-INR. If the cycle now turns, which I am positing it is turning this year, although again, in finance or economics, everything is a probability. Nothing is a physics kind of formula. But I'm positing it is turning this year. It may have already turned in February with this Trump war, trade war leading to the dollar index actually falling despite global uncertainty. Assuming that thesis is correct, इस बार क्योंकि आपका वो 2% और 2% तो रफली कैंसिल आउट कर रहा है, वो आपका साइक्लिकल हेडविंड टेलविंड बन जाएगा. That is what brings back, which is completely unheard of, not just for me, even more so for younger people like yourself, because हमने तो खाली डॉलर को रुपये के खिलाफ अप्रिशिएट करते हुए देखा है, right, by average 3-4%. और 2002 to 2007 कितने लोगों को याद है, और उसके पहले भी रुपये डिप्रिशिएट कर रहा था. So, but this time because the inflation gap is less, the structural gap is more in GDP per capita, not GDP per capita, and the cyclical headwind becomes a tailwind, the rupee can actually appreciate. Now, let us say it appreciates. We can keep on debating the extent of appreciation and when exactly it happens, and we'll come to it again. What does it mean for investing? It means for investing is, let us say, I'm just taking an example for educational purposes. You are a hedge fund manager sitting in New York, and you are analyzing Asian Paints. आपने वही DCF, NPV, APV किया, आपने जो एक्सप्लेन किया, कैश फ्लोज डिवाइड बाय 1 प्लस डिस्काउंट रेट करके आपने किया. तो आपने निकाला कि IRR, इंटरनल रेट ऑफ रिटर्न, इन रुपी टर्म्स इज 15%. लेट अस से आपने अपने एक्सेल के नीचे एक और लाइन बना ली, IRR इन USD टर्म्स, वो आपने बोला 12%. क्यों? क्योंकि आप 15 साल से देख रहे हो कि USD INR रफली 3% से डिप्रिशिएट करता है. But if that is not the case, that was just a long cycle and therefore we could not understand it's a cycle on a day-to-day basis. If that 15 instead of becoming 12 becomes 17, then other things being equal, are you more likely to invest in Indian equities or less? More likely, right? Because now your dollar returns are higher. You are thinking in dollar terms, right? Because you are living in New York, your investors are based in the US. Or even if you are based out of London, your investors may be in the US. You may be based out of Singapore or Dubai, but your investors may primarily be US focused, even if they are not American themselves. Because America still is around half of the global market cap, 1/4 of the global economy, right? So now that 15% rupee returns, instead of becoming 12% dollar returns, becomes, say, 17% dollar returns. That is when the FIIs start to come back. So the last 10 years in Indian markets, it's a very interesting point. 2025 could be the 10th straight calendar year of positive returns in Indian markets. Even the COVID calendar year, 31st December market was higher than 1st January.
Oh.
The lockdown happened in March. If this year is positive and already we are seeing a lot of momentum the last month or so, or 3 weeks or so, this will be the 10th straight year. But what makes it doubly fascinating is this has happened while the FII ownership of Indian markets has fallen from around a quarter, so 24-25%, about a decade or 12 years ago, to today around 16% or a sixth. So despite FIIs in the secondary market on a relative basis selling, Indian markets have basically gone ahead year after year for a decade almost. Of course, why? Because of domestic money and ROE and growth and everything else that we discussed so far. But if the dollar cycle turns and the FIIs also come back, and seeing the markets do well, people start increasing their SIPs. जो 3-4 महीने से लोग थोड़ा हिल गए, they did not necessarily opt out, but their confidence was slightly shaken, or they did not increase the amount of SIP on average, whatever it was. They start doubling down, and FIIs start returning. You can imagine what happens with the Indian markets multiples. Of course, there'll be a reaction to that. Also, promoters will sell a bit more. Institutional investors may sell a bit more, domestic ones on the margin, but then they'll have more cash. More public issuances will come, more IPOs will happen, more FPOs will happen, more QIPs will happen. But kitna absorb ho payega, it remains an open question. So the interesting thing about this is it's not just an academic macro discussion and everything is interlinked with geopolitics and domestic politics and etc. It has real world implications on your and my portfolio and anybody's portfolio who's watching this.
So from what I understand, so आप बोल रहे हो कि like in the future dollar जो है it will depreciate against the rupee.
See, first of all, I cannot say anything with
Yeah, I mean I know,
certainty.
but that is your view, right?
My view is based on historical patterns. See, the dollar since 1971, when the Bretton Woods was removed or ended by Richard Nixon by delinking dollar with gold, 71 to 85 was the first full cycle. 71 to 78, the dollar was depreciating. 78 to 85, the dollar was appreciating. Then 1985, when something called the Plaza Accord happened, we'll discuss it later. The dollar started going down again. So 85 to 95, the dollar was falling. Then 1995 to 2002, the dollar was rising. 2002 to 2011 was the last period when the dollar was falling. The last half cycle. Or maybe towards the end, global financial crisis was, so realistically, 2002 to 2007 was the period. It is not a coincidence that those are the best 5 years of the Indian market. And उस समय तो SIP culture भी नहीं था. Right? So I'm not saying that we are going to see those exact returns. I mean, I want to be very clear because this time the starting valuations are different. There are many other factors. But the broad pattern is interesting. And this time, actually, the dollar half up cycle has lasted for 14 years, as opposed to the last two times when they lasted for 7 years each.
Yeah.
78 to 85, 95 to 2002. Why? Because COVID extended the cycle. So a lot of people, including myself, were wrong about timing the dollar down cycle. Because for one reason or the other, it kept on getting extended. COVID, Russian invasion of Ukraine, a lot of small things like big tech, etc. But then, of course, Trump coming, dollar spiking now, with reality hitting the dollar coming back again. So that's not an excuse. In markets, being early is being wrong. I always believe that, including for myself. You're wrong. That's fine. That does not mean that the fundamental understanding of the cycle changes.
Yeah.
It just means the timing changes. So this time, because there are no more major events on the horizon, although, black swan by definition is a black swan.
Yeah.
Nobody thought of the pandemic. Nobody thought of even wars necessarily. But the big elections, for example, in India and US are done. India's state elections are done. Right? Whatever one thinks in terms of political preference, there was some uncertainty in the Lok Sabha election that was kind of undone after the BJP did well in the state elections. So the long story short is there is political stability. There is good macro in India with low inflation, decent growth. It was much higher the last couple of years. This year was a bit lower, FY25. FY26 should see some rebound. So it seems now on the domestic side and more importantly on the foreign side, with the dollar cycle anyway extended and the trade war happening, Europe therefore loosening the fiscal purse strings, trying to get some military autonomy, some tech autonomy. China is likely to do another fiscal stimulus because of the trade war. And in general, US exports becoming very uncompetitive. The Trump team itself wants the dollar to weaken. They will not publicly say that in so many words because no politician wants to publicly say that we want our currency to weaken. But they do believe that one of the reasons the US has become relatively deindustrialized, if not in terms of production, definitely in terms of jobs on manufacturing side, true, false, partially true is a separate discussion, is because the US dollar has been so strong, American financial markets have been very strong, that industrialization or reshoring or onshoring has not happened. So they want the dollar to at least cyclically, if not structurally, devalue. So de-dollarization is not the right term. De-dollarization implies something permanent, something structural. We are talking about a 5 to 10 year cycle here. They want it to weaken cyclically. They want the Chinese currency to appreciate. They're in fact using the threat of tariffs partially to negotiate on that whenever that starts. So far, Xi Jinping and Donald Trump have not even had a phone call, apparently. Whenever that starts, one of the key asks of the Trump team will be, you appreciate the Chinese yuan against the dollar. Although in the short term, the Chinese are more likely to slightly depreciate it because, you put a tariff on me, I try to depreciate my currency to try to minimize the effect on my exports to you. Right? Because by devaluing my currency, my exports become slightly more competitive again because you are buying in dollar terms. So if your dollar goes a bit further in yuan terms, you can buy a bit more from me. But in this time, the Chinese do that. That is likely to lead to more tariffs from the US side because they're saying this is the problem we want to solve. We don't want to make it permanent longer. Even if we can't fully solve it, let's solve it partially. So their team is not saying it very openly, but Ray Dalio, for example, a hedge fund manager who went to Beijing recently, he came out, wrote a couple of tweets about it. Stephen Miran, the chief economic advisor in the US, he has written about it. Scott Bessent, the US Treasury Secretary, he has talked about it. And Donald Trump and JD Vance also believe that the dollar is too strong. They would rather call it China is manipulating its currency by keeping it too undervalued. That's a politically more palatable message to sell, but effectively they're the two are the same thing. So they also wanted to reduce. So what happened in 1985 was a Plaza Accord. This time people are calling it a Mar-a-Lago Accord, which is the Florida residence of Donald Trump. You can call it a Zhongnanhai Accord, which is what I call is a residence of Xi Jinping. Whether they put it in writing or not, one of the key things they will debate or negotiate is can they get the Chinese currency to appreciate? Because they feel the Chinese surpluses are too strong on goods exports. And even though Indians and Europeans may have a few differences with Americans, this is one thing everybody agrees on. That the Chinese export surplus, Chinese manufacturing capacity is just too large. And we have to put anti-dumping duties on this sector or that sector, and just getting out of control. Because what happened was China, after 2020, just before COVID started, had tried to control the real estate boom. Then COVID happened. So domestic consumption anyways was unlikely to happen when everybody's in lockdown. So they redirected those public sector banks, which we discussed, right? Government control, state control. They redirected credit from there to manufacturing. और domestic consumption low है, तो manufacturing का credit कहाँ पे जाएगा? वो factory में जाके वो goods कहाँ जाएगा? Export होगा. They had $1 trillion plus goods trade surplus last year. Of course, some of it is front running in the sense that people knew the tariffs were coming. So लोग inventory restock कर रहे थे अमेरिका में, यूरोप में, etc. Especially in America. But the point is the Chinese goods surplus has become so large that the rest of the world at this scale of Chinese economy just cannot absorb it. So the Chinese will not be accepting this eventually out of a sign of being bullied. They will be very careful about that. But the only partial satisfying outcome of this trade war from a US-China perspective is if the Chinese do accept that pivoting towards domestic consumption fully, or at least more significantly than so far, is the only sustainable way to continue any kind of sensible global trading or economic architecture. So that is one of the things. This does not mean in the short term they cannot devalue further. I want to be very clear, because they may devalue just to get a negotiating brownie point in. Because basically both of them are negotiating with guns to each other's heads, right? Effectively. Both of them are playing brinksmanship. 100%, 150%. I mean, numbers have become berserk, right?
Wait, 245 is the latest.
245 is not the latest. 245 with the numbers they mentioned, including pre-existing 100% tariff on EVs in China. Okay. So the headline number across the board remains 145. For example, 100% on Chinese EV imports into America was 100%. That was added. So they said some goods up to 245%. Okay. So I mean that is like a car goes for $10,000 there and it's $35,000. Okay. So that is for all practical purpose saying that, or $20,000 becomes $70,000, right? So that's for all practical purpose saying that we don't want to import your cars. Yeah, I mean that's not a realistic number, right? So the broad point is currency is very fascinating because it leads to geopolitical effects, it leads to trading effects, it leads to investing effects. And one of the things which is so relevant in today's investing world, geopolitically, geoeconomically, is that a country can, in the short term, medium term, gain more export scale by just devaluing the currency.
I just wanted to clarify or delve deeper into when you said that अगर एक country की currency depreciate हो रही है तो उसके exports more competitive हो जाते हैं.
Right? Other things being equal.
Equal, yeah. Ceteris paribus. So that is, I think, constant
in
assumption.
general हम बोलेंगे.
Yeah, in all the cases.
Yes.
तो इसमें एक example के साथ just मेरे को explain करना है audience को. So for example, अगर रुपी की मैं बात करूँ तो रुपी अगर $1, let's say $1 was rupees 80, and एक product था इंडिया में जो 100 rupees का बिक रहा था.
आप 80 rupees का ही बोलो ना. Simple.
हाँ ठीक है, चलो 80 rupees का बिक रहा था, तो वो $1 का हो गया. अभी जैसे रुपी डेप्रिशिएट हो गया, रुपी डेप्रिशिएट होके इजी पर्पस के लिए मैं 120 मान के चलता हूँ, $1 120 हो गया. तो यही सेम प्रोडक्ट जो है अभी
वो 67 सेंट्स का हो गया.
हाँ करेक्ट 67 सेंट्स का हो गया. सो दैट्स व्हाई यूएस के लिए अभी ये सेम प्रोडक्ट जो है वो
बहुत सस्ता हो गया.
सस्ता हो गया.
Yes.
दैट्स व्हाई एक्सपोर्ट्स विल बिकम मोर कॉम्पिटिटिव
Yes.
बिकॉज यूएस के लिए अभी ये सस्ता हो गया.
Yes.
समझ गया.
And इसमें भी जो ceteris paribus बोला उस पे आते हैं. Interestingly, the first decade of the century or millennium, 2002 to 2007 particularly, when the rupee was strengthening, the dollar was weakening, compared to the last 5-10 years when the dollar was strengthening and the rupee was weakening, you would think the last 10 years would be better for export growth. That is not the case. 2002 to 2007 was better. Why? Which is why economics and finance is so fascinating. There's always a second order effect. Because when the dollar was weakening, global demand was rising. Generally, dollar weakening means 4% of the population of the world से पैसा निकल के rest of the world में liquidity जा रही है. So actually, despite the rupee strengthening in that decade or broadly remaining flat around mid 40s or high 40s from 2000 to 2010, taking out the financial crisis, the taper tantrum finally happened in 2013. So 2012 तक 50 के आसपास ही था. Despite the rupee being so strong in nominal and especially in real terms, it is the best time for exports growth. Uske baad, the rupee has actually gone down to almost high 80s, and goods growth, services is a bit of an exception, but goods growth has nowhere been as close because global economy was a bit slow because money was going back to the US. So there's always a second order effect. This applies more for US cycle में जो हो रहा है. India, Vietnam में India suddenly weaken हो जाए because both of us are exporting to the US or developed markets. It becomes more relevant then, which is why I said, even though the dollar index as reported in Economic Times, Financial Times is often a basket of US dollar against developed market currencies, the RBI still keeps a strong eye on USD CNY. In fact, all other Asian economies keep an eye on CNY because अगर वो weaken होता है, other countries are forced to at least competitively devalue to some extent, or if not devalue, at least they are not allowed that easily to appreciate their currencies. Because directly, indirectly, they are competing with China for exports.
Got it.
So it's a relative thing more than an absolute thing all the time. So it's maybe it's always a bit asterisk.
Yeah.
Sorry, I mean, it's not a slam dunk answer for the viewers, but it is how it is.
No, but I think this is very helpful because ceteris paribus जो हम बोलते हैं, I think of course theoretically we have to say that, but practically that will never be the case.
Because वो जब generally कुछ होता है तो उसके कुछ और concomitant effects भी होते हैं.
Yeah. Correct. But I think for explanatory purpose, this was like very helpful.
Yes.
So Plaza Accord की आपने बात की. So what exactly happened in that 1980s period of Plaza Accord? And आप जो बोल रहे हो अभी वापस same
some version of that. No, maybe not same. So
है?
1985, what happened was, as I was saying, I told you earlier, Paul Volcker became, I think, the Fed chair in 1979 or so. Just like current times, the last 3-4 years in the US, and especially after Ronald Reagan became the president in January 1981, while Paul Volcker was increasing interest rates to basically kill inflation, Ronald Reagan was increasing fiscal deficits because he had promised tax cuts. He did tax cuts. And he had promised national security defense expenditures to go up because he wanted to take on the Soviet Union and finally crush it or whatever, have those Star Wars, those anti-ballistic missiles, space wars, etc. Long story short, he spent money on tax cuts and defense, expanded the fiscal deficit, while the monetary tightening happened. Interest rates were increased. It's very similar to what happened in last 4-5 years in the US.
Just to explain, so fiscal deficit is basically how much money the government is spending minus the total income which the government is
higher
getting.
Fiscal deficit means they're spending more compared to the taxes they're taking in. So the gap between spending of the government minus the revenue of the government, if it's higher, that means fiscal deficit is higher.
Okay.
Okay. So America mein in the early 80s, money was tight, basically interest rates was high, and fiscal deficit was becoming higher. That is generally a recipe for dollar to strengthen. Why? Because interest rate high means people are thinking कि यार हमारे country में 10% मिल रहा है उधर 15% मिल रहा है. Let's send there. Fiscal expansion generally keeps the economy strong in the short term at least. So there is no recession, there is no contraction. There is activity happening. And because the dollar is not getting weaker, then people बोल रहे हैं 15% मिल रहा है, 10% मिल रहा है, and कोई currency का downside नहीं है. So then that cycle builds on itself. Very something similar happened in the last 5 years in America also, but we'll come to that. So the dollar became very strong from say 1978 to 1984 end. And this is the time when a lot of West German, because Germany was not united then, East Germany, West Germany का unification बाद में हुआ था after the Soviet Union fell. West Germany की currency थी Deutsche Mark, उस समय euro नहीं था. Japan obviously was there, उसका currency yen ही था. A lot of German and Japanese cars. I mean, this deal was with Canada, France, UK also, but it's primarily with West Germany and Japan with the US. And it happened at a hotel in Manhattan called Plaza Hotel, which, by the way, later on was owned by Donald Trump. I think it also went bankrupt at some point. And Home Alone 2 की shooting इधर हुई थी in Plaza Hotel. And उसमें there is a scene in which Donald Trump is there in the background. I don't know if you remember that. So Kevin or whoever that actor was as a child actor, there's a Donald Trump scene behind. So just a historical tidbit. But basically, Ronald Reagan was the president then. He met the German and Japanese, his people met the German and Japanese people. He told them that आप अपनी करेंसी को अप्रिशिएट करिए, डॉइच मार्क और येन को, जो आज के दिन बिहाइंड द सीन्स वो चाइना को बोल रहे हैं. क्यों? क्योंकि आप बहुत गाड़ियां, यू आर एक्सपोर्टिंग टू मेनी कार्स टू द यूएस. If you don't do that, we will put voluntary export restraints, is what they call it, VER, which is basically a fancy way of saying tariffs. We will basically not buy as many of cars. या तो आप अपनी करेंसी अप्रिशिएट कर लो, नहीं तो हम कुछ कर लेंगे. So they made a deal. The deal was actually not as strong as it ended up becoming for especially Japan. Japan की currency बहुत ज़्यादा appreciate करी उसके बाद, which partially led to the Japanese bubble and then later crash. One of the reasons why China does not like the word Plaza Accord, because it is seen as forcing Japan to become temporarily financially rich but long term economically defanged. It is a connotation of the accord कि उस accord में उन्होंने जबरदस्ती जापान को एक बार तो अमीर कर दिया. At one point, just the Tokyo Palace was more expensive than all of California put together. At one point, the Japanese stock market was more valuable than the US stock market, and the Japanese GDP almost caught up with the US.
Wow.
Because the yen appreciated massively. But long term, because Japanese exports became uncompetitive, etc., other reasons, Japan का long term slowdown हो गया. Partially because of this, although there were other reasons like demographics, etc., debt, all of that. So what happened in Plaza Accord is 1985 में dollar का peak हो गया, then dollar came down. As I said, 1995 was the next bottom, फिर भरा 2002 तक. The Plaza Accord was Americans basically forcing or arm twisting the Japanese and the Germans to appreciate the Deutsche Mark and the yen against the US dollar. The US dollar effectively came down, and the US dollar came down, and they were happy because they had to import less from other countries. And after that, by the way, German and especially Japanese car makers started making plants in America. The Japanese especially went to southern parts of the US, जहाँ पे union बाजी कम था थोड़ा सा. And then that continued. So now, what people are talking 40 years later, see, of course, it cannot be the same thing because Japan and Germany were dependent on America for security against the Soviet Union. जबकि अमेरिका का तो actual geopolitical foe China ही है. So China, US does not have the same kind of leverage on China as it did on West Germany and Japan. West Germany and Japan, they could simply say, like, listen, you literally are covered by my nuclear umbrella. You kind of have to listen to me, right? They were allies, but they were in a way subservient to the US, you can say it. I mean, without being too disrespectful, I think it's fair to say that. The Chinese, of course, are under no such geopolitical or military pressure. If at all, they are actually a threat or a competitor to America, right? So using the geopolitical or security card will not work with the Chinese. And they may not write anything, they may not be seen as losing face. But the Chinese are exporting much more to America than they are importing from America. And more importantly, as I was saying, Americans may disagree with Europeans and Indians on many things. Everybody thinks that China को कुछ ज़्यादा export हो गया. So the Chinese are under pressure. See, Sun Tzu had a famous saying, appear strong when you are weak and appear weak when you're strong. So it's not, the Chinese are playing it very tough right now with Donald Trump. They're not even, as I said, picking up the phone and talking with him. That does not mean that they're not in a bad situation. They are in a bad situation. So the Mar-a-Lago Accord, which was named after a Florida resort that Donald Trump owns, or I'm calling it Zhongnanhai Accord. Zhongnanhai is their Rashtrapati Bhavan, which is where Xi Jinping lives and works, etc. Whatever you call it, whether it is written, it's publicly, officially announced or not, at some version of this will have to happen because the Chinese trade surplus is just too large for the rest of the world to absorb. But again, the caveat there is the short term, they may make it worse before it becomes better. But the only way out of this is for some appreciation of the Chinese currency, which interestingly will mean a big Chinese potential stock market bubble also. It could mean, for example, let's not say will mean, could mean, because China में already inflation बहुत low है. In fact, some numbers show they're in deflation. So generally, जब एक currency appreciate करती है, तो inflation कम होना चाहिए उधर, because whatever they were importing becomes cheaper. Whatever they were exporting, they can export less, so they have more capacity lying idle. So if China now appreciates its currency out of pressure, out of own choice, or a combination of both, they will have to involve massive fiscal and monetary stimulus along with it. Zero interest rates almost, QE of another scale, the way the Japanese did in the 90s and early part of the century.
QE क्या है?
Quantitative easing, just buying their own bonds.
Okay.
So the central bank is buying your own government bonds. It's like a way of pumping money in the economy, right? You'll basically print money. More likely you create money on computers and you just pump it into the economy, right? So the Chinese doing that will mean Chinese consumption finally happening, but the Chinese assets will also re-rate. The Chinese GDP in dollar terms will look bigger than it looks today. That will also not be very good news for Donald Trump, but he would rather choose that than this. So it's a very interesting time, therefore, to observe all of this. And the Plaza Accord, therefore, is applicable for today, but in a very modified situation. The Chinese, as I said, are very wary of doing something very similar because they don't want to get a short-term financial boost to get long-term economically uncompetitive. But again, the detail there is that the Japanese are not supposed to appreciate the currency by the extent they did in the late 80s. That was not what is written in the Plaza Accord. Once it happened, things kind of took on its own life. And when you do it for the first time, you don't have any precedent in history to look for. So the Chinese will not go to 5 to the dollar, right? And not anytime soon. If they do an appreciation, whether they announce it or not, it will be a relatively limited appreciation, maybe in the beginning. So some version of Plaza Accord is very relevant for today. It may take 2 months, 3 months, 6 months. It may become worse before it happens. It may not be to that extent. It may not be for the same reasons or the same leverage. But without that, the global trading architecture does not become remotely in harmony or equilibrium. It's never fully in equilibrium, but right now it is completely out of whack. So this kind of trade surplus, like the Indians had to again put anti-dumping duties on Chinese steel, effectively Chinese steel. China has more than half of global steel capacity, half of global cement capacity. In many cases, half or more than half in many capacities. It's just for a population that's 1/6 of the world, that is no longer sustainable. If you want that kind of capacity, you'll have to shut down some of it and you'll have to appreciate your currency so that you can consume more of that at home. Basically, if you're already rich in industrial terms, but you don't want to show it because you want to spend more time adding more capacity, which can work when you're small, it cannot work at this scale. So, which is why I feel the Plaza Accord in some way or form will happen this year potentially, but for completely different pressure point reasons and maybe to a lesser extent and maybe not officially announced.
एंड इसमें आपने बताया कि जैसे करेंसी अप्रिशिएट होगा तो वो कंट्री का इन्फ्लेशन रेट विल
कम हो जाता है ना, अदर थिंग्स इक्वल. फॉर एग्जांपल इंडिया इंपोर्ट्स ऑयल. अगर आज रुपी 86 से 76 चला जाए and for the same price of dollar price in barrel terms, you'll have to spend less in rupee terms to import oil.
Yeah.
So generally speaking, again,
तो नहीं, हाँ, तो spend less, तो basically इससे inflation मतलब कम कैसे हो गया?
in our case,
import prices कम हो गए इसीलिए.
तो आपका पेट्रोल पंप में दाम कम होना चाहिए. In our case, what happens is when the oil prices go down, the central and state governments end up increasing the taxes for the last few years. So the sticker prices remained at around 100 rupees to the liter for petrol, because that indirect tax has been useful for state and union governments. But let's say other things that we import, right? An iPhone becomes cheaper. And if an iPhone sells for $1,000, then instead of 85,000 rupees, you pay 75,000 rupees. You can add taxes, tariffs, whatever, but it will get cheaper by that much. Similarly, on the export side, a more nuanced point, your capacity, you have more free capacity because you can't export to that level. And generally, free capacity leads to some price pressures reducing. You have more spare capacity, you have more idle capacity. So for China to appreciate its currency when it already is close to deflation, it will really have to do a big stimulus. अभी तक थोड़ा बहुत फिस्कल किया था, सितंबर में किया था after the first 50 basis point cut of Fed last year by Jay Powell. This time they'll really have to do a fiscal and monetary stimulus, go to almost zero interest rates, do QE. हम QE को इंडिया में OMO बोलते हैं, open market operation. It's effectively the same thing. RBI buying bonds. Basically, they'll have to pump in a lot of money, which will effectively pump up the stock market, because this time they're very clear they don't want to pump up the real estate market. So what else is there left to pump? But they're anyways buying and importing more gold than earlier. So, which is why I was saying the 20-year ka jo correlation or lack of correlation tha between Chinese growth and stock market, that lack of correlation may not necessarily hold going forward. Going forward, the growth may slow down economically, but the markets may boom. So once you understand the deeper reasons, and assuming your thesis is correct and there is an element of luck in the timing involved, then what seems absurd becomes less absurd. Ki last 20 years GDP growth was high, markets were terrible in China. Maybe the next 10 years GDP growth is much lower, because you remember you are exporting less with a higher currency now, but the markets do much better. So it is what it is.
So, and why are you saying ki, they don't want to pump up the real estate prices?
Because that was actually before COVID hit. They were already in the process of trying to control, right? What is happening is there are multiple reasons. They think that real estate is beyond a point not the most efficient investment. There are so many empty flats, sometimes empty small towns and cities in China. Overbuilding bahut ho gaya tha. Secondly, because of both cultural reasons, right? You know, if a young man cannot buy a flat, he's unlikely to get married. If they don't get married, they're unlikely to have children. And then China, anyways, there's a demographic slowdown. And in China, unlike in some Western societies, having children outside of marriage is not very common. Although slowly, there also the government is reluctantly changing attitudes, because they just right now badly want more children. So, of course, it's not just men buying flats. Young women are also buying flats. But as a general example, that is a social reality. And they don't want flats to be so out of reach for young couples that they delay marriage and procreation. So it became too extreme. So actual Chinese wealth creation in any asset class from 2000 to 2020 was more in real estate. So anybody who bought flats in Beijing, Shanghai, Guangzhou, etc., they made a real killing.
Okay.
Especially if they bought it on leverage, EMIs, etc. So they are saying that cannot be further fueled, that cannot be further pumped, because that eventually the cycle has to stop somewhere. Then banks will have a bunch of NPAs, etc. They're saying it's painful, but let's stop it, let's slow it, let's pause it, let's partially reverse it. But then what else is there? They have to pump up their equity markets. If QE will happen, right? अगर आप export नहीं कर सकते, आप real estate और नहीं बढ़ा सकते. There's only so much gold or Bitcoin or etc. Whatever some young people want to buy. Gold is more acceptable because their central bank is also buying it, especially after Russian reserves were kind of taken over by the US and EU authorities after the Ukraine invasion. So there is nothing else left to pump. So which is why after briefly, getting Jack Ma out of the public eye, Xi Jinping met him and a bunch of other Chinese entrepreneurs recently to show that, okay, the private sector is back in the good books again. It's just a signal to the broader stock market that, it's okay to buy his business. It's okay to buy his stock. I'm not going to suddenly come and crush it. So that's the problem of the Chinese system and the strength of the Chinese system. But it's very centralized. There's no accountability beyond a point. So a lot of things can get done, and it's a broader theme we can discuss. Going back to the one-child policy, great leap forward, cultural revolution, that they can do things much better, but they can also do things much worse because the way the system works. India is more slow, more stable, but more anti-fragile, more accountable in that sense. So that's another reason which has geopolitical implications as well. But the Chinese, long story short, they cannot pump up the real estate bubble anymore.
Got it. Fair. And in one of the previous answers, you used this term de-dollarization. So exactly क्या मतलब है de-dollarization?
Yeah, as I said, de-dollarization is something I don't believe in, because I am not saying that structurally the dollar is becoming weaker or the dollar is not going to remain a reserve currency or hard currency. What I meant was cyclically the dollar will become less important.
Yeah, but no, I'm asking what is the meaning of this term de-dollarization?
Okay, that's a good question. I understand. De-dollarization, people generally use it as a term to mean the dollar becomes less important, either in its value or its importance or its attraction for other central banks to buy. Why do central banks buy dollars, for example? This especially accelerated after the 1997 Asian financial crisis, when Thailand, for example, was literally taking dollar loans, and they had fixed exchange rates, and then suddenly their fixed exchange rates were no longer economically tenable. They depreciated their currency, and now you had to pay much more because you had taken a dollar based loan, right? So they said, to protect our economies, let's always have a certain percent of GDP in dollar reserves, so that if the global cycle suddenly becomes unattractive or hostile, etc., we can sell some dollars to protect our local currency. To protect your Thai baht or Indian rupee, Indian rupee was never fixed, but still, never fixed in the 90s to that extent. Although when the dollar cycle turns and emerging markets make much more money, in the short term they will buy more. But this may be the last hurrah. On the other hand, so that's a structural bid which is getting close to, because everybody now has enough dollar insurance or is getting close to having enough dollar insurance. And then on top of that, there is a dollar cycle, which we spoke about earlier. So the dollar cycle, since we are at a 20-25 year dollar cyclical high, the next few years is likely to see the dollar going down in a cyclical sense, but that would not imply de-dollarization the way people think. So it will be a cyclical de-dollarization, if you want to use the term, although I'm hesitant to use the term, because de-dollarization in some people's mind, as I was saying, implies that dollar will no longer remain the world's reserve currency. It will no longer be valuable. It will lead to massive hyperinflation. No, those things are not happening, unlikely. But the dollar will become cyclically less important. Maybe in 5-10 years, it again starts becoming more important. At the same time, structurally, the dollar will also become slightly less important, but still being a reserve currency. So, Barry Aiken Green is a professor who often talks about monetary policy, finance, economics, etc. I think he's University of California, Berkeley based. So he has written a paper saying that you can have multiple reserve currencies in the world. Dollar may remain the most important for some time, but there is no intrinsic reason in today's age of computers, etc., that a Chinese economy, which is larger than Indian economy, and once the Chinese yuan appreciates, it'll start catching up with the US economy in dollar terms. If they open their capital account, although they have some issues given their political system, as India grows much larger and slowly opens its capital account, you could have 2-3 reserve currencies in the world by 2035, 2040. If that is the case, of course, the dollar's relative privilege decreases. If something similar happened, one of the reasons the dollar cycle turned in 2002, we can kind of guess as a proximate reason, is A, of course, the Chinese entered the WTO and started growing much faster, exporting much faster, but also the euro was created in early 2000s. The euro, the European economies individually are not as powerful as they are in a combined sense. Even though they're not exactly one country, but the euro together as a eurozone GDP is almost comparable to the US. It's fallen behind a bit towards the last 10 years, but it is comparable. And as ironically, because of Donald Trump's tariffs, Donald Trump's threat not to defend them against Russia, etc., is forcing the Europeans to unite a bit more. So they issued joint bonds last time during COVID. They may issue new joint bonds for defense purposes this time. Germany's already reduced or ended its debt break, like that we will not have any fiscal deficit, etc., despite a new government having promised the exact opposite. But they said, because Donald Trump is saying he may not defend us against Russia, etc., he's not helping Ukraine to the extent we want to. So we have to now change this policy. So we have to do more investment in our defense, more investment in our infrastructure, more investment in renewable energies, etc. So based on that reason, the European currency may become more coherent. The Chinese may become more open in their capital account, and India may grow much more rapidly. So we may go towards a world where there are 3 or 4 reserve currencies. That does not mean the dollar will not remain a reserve currency. That does not mean the dollar will not see cycles. But right now in 2025, what is most likely in terms of probabilities, without being 100% sure, is the dollar now sees a down cycle. That some people will definitely confuse with a structural de-dollarization. Although by the early 2030s, they may be wrong on that, because the dollar may start, for all we know, another up cycle. But for the time being, very, very bearish on the dollar in a cyclical sense, but not necessarily in a structural sense. Although structurally, the euro, Chinese yuan, and the Indian rupee may become more important in another decade or so.
Got it. And about the US China trade war, which is happening right now, the tariff war, which we also briefly discussed, इसके वजह से what do you think कि Indian जो like India है उनको क्या क्या opportunities है, and what can we export, or what are like some of the industries or products that you think will have a lot of advantage?
No, I think it's a bunch of industrials across a range of industries, boring sometimes, from chemicals to pharma to steel and other products. Although there are deep interlinkages. We may buy the input from China and then sell to America and so on and so forth. More broadly, the China plus one strategy, as a lot of people have been saying, has become more pronounced in last week or so because of the way this whole Trump announcement went. Initially on 180 countries, now only on one country, with the other countries doing negotiations over the next 2-3 months. Even when those tariffs were announced, India had a lower tariff number than a Vietnam or a China, because these numbers were basically announced on a bilateral trade surplus basis. It was just based on that bilateral trade deficit the US has with that country as a percentage of its overall trade with that country divided by two. It was simply that formula. Um, so even then, India was looking relatively better off. But now, with so much pressure on China, India may not be as better off compared to a Vietnam today, but compared to a China, it is. So now, if you're an Apple, you want to accelerate the relative shift of production out of China towards India, and in a bit towards Brazil, etc. Also, they are going, but India primarily, because you don't know what happens next in the trade war, and if these tariffs remain, although they have currently exempted electronics like smartphones for some time, but if it comes back, it becomes almost impossible to sell iPhones at the price the American audience and American public and consumers were used to, right? So, because that threat is hanging on your head, even if it is 5-7% more expensive because of lack of economies of scale in India, let us say for the time being, although some of that is met with PLI, the production linked incentive subsidy or incentive that the Indian government gives, you want to shift towards India. And India is benefiting there because of these policies, but also because of Indian scale. Because if you want to sell to the Indian domestic audience, Indian domestic market, which may be relatively small today but growing rapidly, it helps that you manufacture or at least assemble in India, because then whatever little tariffs India may have, India does not have 100% tariffs or etc., but whatever tariffs India has, you jump those tariffs. So if you can't export all of it in a down year, you can sell more in India. Or if you have a bumper year in India, you kind of sell more in India, export less, or vice versa. So India becomes a naturally attractive export hub for a company like Apple and others, because Vietnam may also be equally, if not slightly more efficient, but the Vietnam domestic market will never become as large as India's, right? So if you go to Vietnam, the way, for example, Samsung was all in into Vietnam at one point, of course, it has a massive plant in Greater Noida as well. But to export from Vietnam to India, you may have a few tariffs, despite the India ASEAN FTA going forward, right? So all FTAs are basically up for renegotiation or exemptions or this or that clause.
FTAs are foreign trade
Foreign trade
agreements.
agreements. And now, I mean, you have India is right now negotiating a bilateral trade deal with America, which is just short an FTA. Same with EU. We've had similar deals with Australia and UAE in the recent past. So what India is doing was, India was looking east, ASEAN, Japan, South Korea, thought of joining RCEP, which is Regional Comprehensive Economic Partnership, where China is also there. At the last moment, said no. Went through a protectionist phase, very moderate one, is now making that protectionism or that industrial policy a bit more sophisticated, and is wanting to sign trade deals towards its west, so Middle East, America, Europe, Australia, so that it is integrated to the global economy without getting overwhelmed with Chinese imports, which may come directly from China or via Vietnam, etc. Although there are transshipment clauses, minimum value add clauses, which is very difficult to enforce and calculate and measure all of that. You can have, as part of your India ASEAN FTA, ASEAN stands for Southeast Asia, that, you know, if you import something from China and do only bare minimum value add, you cannot then export to India duty free. But how do you really measure that? You can't. Can you realistically track the entire supply chain, um, how it is backward integrated, what its vertical and horizontal linkages are? You can't. So beyond the point, India has realized that while we cannot definitely decouple from China also, because our pharma depends on their APIs, chemicals may depend on some input molecules, etc. It's just too large an economy to decouple from. On the margin, we want to make sure we slightly decouple. At the same time, we attract more investments from them, provided those investments are part of a JV, or where the Chinese is a minority partner, or where there is some tech transfer. So after Gulwan and the geopolitical crisis, there was a short-term full freeze to the extent possible, although the trade deficit increased. Now India is trying to have a more sophisticated strategy that we're okay with your investments, but you come as a junior partner. You give us the technology. You make some money along the way, that's fine. But you are leading the world in renewable tech, in EVs, etc. So let's do business together. But you don't get to dominate the supply chain. And we will indigenize the supply chain slowly but surely. And it's an offer that the Chinese are not happy about it, but they don't have much alternative. The US market is trying to push them out. Again, they will also not fully succeed. They will end up having some deal. And India, again, a relatively small market today, but a huge market in 5-10 years, even more than 15 years, and so on and so forth. Just before the show, we were briefly discussing about the Maruti example, right? I mean,
Yeah.
Maruti came to India, 40-45 years ago. It's basically Suzuki owned, right? Japanese company. And now the business in which they just have a narrow majority stake, that business is Maruti Suzuki India, is worth significantly more than Suzuki Japan, the parent entity, which has a majority stake in this business, right? So it shows that if you are able to invest in India for the long term, you can build huge businesses in India, despite being a foreign company. So do the Chinese really want to give up even minority stakes? If they become totally out, removed from the Indian industrial chains, they lose to some extent the next industrial revolution. So, what has happened now because of this partial reversal from globalization, especially in goods more than in services, is that scale has started to matter much more. Size has started to matter much more. In a world in which free trade was much more the norm, let's say the 1990s of the world or the early 2000s of the world, even a small economy like South Korea could export its way to the US primarily and do very well. Or city states like Singapore or Hong Kong could do very, very well. Now those city states are doing better as financial heavens more than as trade heavens. Or, or South Korea has seen a natural limit without, I mean, of course, there are social effects. Their fertility rates are very low. If you work too hard, you eat your future seed corn. In the long term, your economic growth may not be sustainable, right? South Korea has the world's lowest birth rate, for example. So there are downstream effects of growing too rapidly if it's not scalable or sustainable for you. But India is one of the few economies, because India is the only country along with China which has a billion plus population. Both of us are around 1.4 billion each. Giving you an idea, the US is like less than 350 million. So both India and China are more than 4 times the US population. And US is number 3 in population. And India is growing faster than China, and India is younger than China. Of course, education, etc., leaves a lot to be desired, but the younger generation is entirely literate, digitally literate, natively literate, etc. So, in that case, what happens is a snowball effect kicks in. So, for India, this world, while not necessarily ideal, where you defragment a bit or you have a lot of regional trade deals, not necessarily a global trading architecture. The WTO is, for all practical purposes, dead, right? I mean, we can use it to sue each other for legalistic purposes and put an excuse to put an anti-dumping duty on China for this or that sector. But WTO as a universal global trading architecture is now dead. So this world where your size and your scale matters much more suits India much more. So far, sometimes scale was a disadvantage. Like you could be administratively inefficient. Everything was too centralized, perhaps. Things were not necessarily as nimble as you want to. But this world suits scale, and this world, the fact that we have the world's largest polity now, because we've overtaken the Chinese in population just about. We were always the world's largest democracy. Now we are the world's largest polity, whether democracy or dictatorship, uh, is something which is very, very powerful. So despite the fact that India is not even exactly $3,000 per capita income, and market exchange rates, the US is almost $90,000, and China is what, 12, $13,000. US India is already number 5 GDP in market exchange rate terms, soon to be number 3 in 1 or 2 years. In PPP or purchasing power parity terms, which is cost of living adjusted, we are already number 3 for a long time. So in this fragmenting trade world, having scale and size the way India does allows us to renegotiate those China plus one terms much better, which is your original question, right? So Vietnam may in the short term be much more efficient, perhaps in some areas, but that's not the only thing an American corporation will look at. They'll also look at, okay, but if you do it in India, then you also have the optionality of selling in the Indian market. If not today, definitely in 5 years. And I think in percentage terms, the iPhone sold in India is probably one of the highest CAGRs for China. It's for Apple. It's still a relatively small part of overall Apple sales because, of course, an iPhone tends to be an expensive product compared to an entry level smartphone. But the small base, notwithstanding, is growing very rapidly. So, of course, people at Apple are not stupid. People at other companies are not stupid. They can do the math, and they're saying, do we want it? It helps that we can also build here and export from here, which is also why, just to the last point before we go to the next question, is, for example, we don't have world beating scale in four-wheelers. In some auto ancillaries, we are getting there. In two-wheelers, we do. Four-wheelers make left, right wheel drive bhi tha. Two-wheelers, so by definition, there's no left wheel or right wheel. And because of that scale, we are predominant, or we are dominating exporting two-wheelers, for example, to the global south, in some African countries, some Latin American countries, etc. Because what happens is, when you have a large share of a particular market, your bad year creates enough vacancy or inventory to export that elsewhere. If you're creating, let's say, 20 million vehicles, and you this year just have a demand for 15 million, you're not going to close the factory for 5 million overnight, right? You will first try to export it. But when your domestic demand or supply is only 2 million, you can't export 5 million. So just the sine curve and cost curve of a large production base, a large demand base, in and of itself allows you to export much more. This is what happened with China in four-wheelers. Because China went to 30 million four-wheeler demand, they suddenly out of nowhere became a huge exporter of four-wheelers, along with the fact that they are leading the EV revolution. Russia came under US sanctions, Europe sanctions, so they got the Russia market, etc. So this scale begets more scale, and in this fragmenting world, if the US and China are fighting, the next biggest entity is India and the European Union, if you count that as one country, but lower population, but of course richer on per capita terms. So these are the only four entities with scale, especially from a 2030 point of view. Everything else has to become, in one way or the other, a satellite of these four.
So you gave example of Maruti Suzuki, which was a company outside India, Japan में थी, and then they set up their
Same with
operations
Hyundai
in
and Kia
India.
now, the largest, second largest, third largest in India.
Yeah, actually, I was going to ask this only. So, are there any other examples of companies which are actually from outside India and उन्होंने आके India में बहुत बड़े-बड़े empires
Yeah, so
बनाए?
I think Hyundai and Kia are examples. Hyundai India is obviously now listed also. So they've done an IPO for all practical purposes. They just issued existing shares and not so much new shares. So this is a very, again, some people think of the Indian auto market as protectionist. It's a very weird form of protectionism where your dominant players are foreign, right? So what this shows about Indian trade or industrial policy is there is an incentivization, there is a carrot and stick approach to try to get foreigners to invest in India. They can keep the profits, no problem. They can even list here and have a market cap larger than their home market cap, as it is the case for Suzuki. And so long as some value add happens here, some taxes are paid here, some jobs are created here, some JVs are created here, some auto ancillaries in the case of auto, some other ecosystems are created here. So it's a win-win, right? We did not say that if you're a foreigner, you cannot compete in India. That would be autarkic protectionism. Autarky stands for unique close to the outside world. So this is more like competitive protectionism. You are incentivizing manufacturing in India, but you're open to anybody and everybody except potentially the Chinese. I mean, Chinese on grounds of national security, BYD may not be immediately allowed, or a Chinese company may be allowed only as a JV with a Jindal or an Adani or an Ambani or a Tata. JV is fine. But except the Chinese, almost anybody and everybody is allowed. The Europeans are doing very well here. South Koreans and Japanese, I mentioned. The Americans did not do well, but that's because the Americans just make a different form of cars. They make huge cars. They did not bother with the right wing and right wheel drive, left wheel drive. So, I mean, the Americans have not done well in Japan also in terms of car exports, not because they're banned or anything. So it's completely open, very competitive. Mahindra and Tata have to try very, very hard to slowly win market share. And they're able to do that because they're part of larger conglomerates. For Tata, of course, TCS is a massive profit pool. Mahindra has had other businesses, including within auto and tractors, etc. Mahindra Finance, Mahindra Tech, etc. So they are part of larger conglomerate groups, and hence they are trying to do well in this business. It's not been a cakewalk for them at all. So, and in other sectors also, like most Indian smartphones are foreign brands, from Apple to Samsung to the Chinese brands. The Chinese brands have done so well, but increasingly they are manufacturing or at least assembling in India, right? Through PLI, through these EMS outsourced subcontracting companies. So the idea is, don't just make in Japan, Korea, Thailand, or China and just ship it and sell it here. At least do some value add. If you do some value add, we understand on day one it won't be much. On day one, the value add may not be enough to cover the PLI cost. But once you are here, for reasons of distance and economies of scale, etc., you'll start to buy something from the local space. For it's not just auto ancillaries; it could be smartphone ancillaries, right? You'll start making the printed circuit board, the PCB. You'll start making the screen of the phone. That itself may get some PLI benefits or incentives. That in turn may happen through a company which has a JV between an Indian company and a Japanese company. But that is how you gradually get the ecosystem here. So we also have to do it in a very nimble manner. It helps to have more state capacity, which is something I wrote in my last book, A New Idea of India. But of course, that's a separate discussion. You need to have better state capacity, because the Indian public also needs to know that there is not too much cronyism around here. Right? The government is doing it for national reasons, national interest reasons, and not to based on payoff of one company versus the other. So whatever incentive you have, they should be measurable, relatively transparent, pre-announced, and not you're not just distributing cash based on who you like. So it's not very easy to do. It does not always work, but this is what for foreign companies have made a lot of money in India. And in some places, they've not been able to compete. For example, a lot of foreign AMCs ended up selling to Indian AMCs. They did asset management companies like mutual fund houses. Many of them were in JVs in the 90s. Eventually, they could not scale up. Maybe they could not scale up because India was not a large enough market for them. They did not pay enough attention to it. Indian fund managers and Indian AMCs were all into this market. They were not in the US. Unka sara dhyan idhar hi tha. So it was not because of any competitive reason necessarily. This is not to say that any behind the scenes maneuvering or control or some kind of orientation does not happen. I'm sure different corporate houses have tried different tricks. That's possible. But by and large, in some sectors, foreigners have won. In some sectors, they have not. But over time, almost all sectors have been opened. I think insurance has been opened much more. Uh, Health, life insurance, everything. Finance, I've talked about asset management. Foreign banks could not compete beyond a point, although they were there. I think Citibank just sold off its personal bank account and or the private banking business to Axis or something. I mentioned within industrials and auto, a lot of joint ventures were there on the chemical side with German companies, Japanese companies, etc. So in industry after industry, foreigners have been able to access the Indian market. And to the extent there are problems in Indian ease of doing business, even though the ranking shows some improvement over the years, but fine, the rankings are not the entire picture. That problems are there for Indian businesses as much as foreign businesses. So it's not so much a way to prevent foreigners from doing business here. It's a broader bureaucratic problem that even domestic businesses face. Similarly, whatever taxations are there on the sales tax, GST, etc., is basically almost the same for foreign or Indian businesses. If a car is expensive in India, despite being manufactured in India, because some duty or excise or GST is very high. It's the same whether it's a Mahindra or a Hyundai. So one can argue about the taxation structure then, and how very few people pay direct taxes in India, and therefore we have to have more indirect taxes like GST in India. But that's a separate discussion. But foreigners have been able to compete in almost all sectors in India. Of course, in defense and other sectors, there'll always be some exceptions or caveats. There also, we are trying to open up as much as possible. Have they succeeded in all sectors? No. But have they succeeded in some very critical, important, large sectors? Yes. Not only succeeded, but they've been able to monetize it by even listing shares here. In a lot of the original MNCs listed in India, their India entities, was actually because of a historical fluke. George Fernandez in the 70s, the Janata Party government said that if your companies want to remain in India, you must list in India. You must become partially Indian companies. So some businesses like Coca-Cola left, which came back later in the 90s. Many multinationals remained and they listed their businesses in India, which is why they continue to remain listed in India. Many MNCs have a India listing, not just the Hindustan Unilevers, but a lot of the industrials as well, right? But now they're actually doing it out of their own choice because they're getting valuations they may not necessarily get in their home markets or in the US market. So that's very interesting that people can actually sell here, produce here, develop and transfer some technology here, and also monetize their entire asset base here. So that really makes India a very attractive market. Despite what some publications may say about India being a very tough place to do business, it is tough and competitive, but there have been many foreign winners as well.
super interesting. Last thing जो मेरे को डिस्कस करना था of the impact of inflation on the stock markets. And आपने एक term use किए थे, दो terms use किए थे. One is CPI, which is consumer price inflation. One is WPI, which is wholesale price inflation. So firstly, एक easy भाषा में like दोनों का क्या meaning है वो एक जानना था. And secondly, ये inflation बढ़ने से गिरने से stock markets पे कैसे impact होता है?
हाँ, so CPI is just what an average family in India would. CPI index is the how much prices they would pay, and CPI percentage change is what we would call inflation. So an average consumer basket in India, although the rebasing or the weights being changed have not been done for a long time. So right now around 45% of the Indian CPI is food and related items, for example, whereas the actual percentage of food consumption in even the median Indian's basket is probably closer to 35-40%. So less, not quite half, more like a third. But nonetheless, CPI is conceptually aimed at what is the average basket median Indian family is consuming and uska kitna price बढ़ रहा है. WPI is wholesale price index. That is more like a B2B input. That's more on steel का कितना price बढ़ा, logistics का कितना price बढ़ा, agriculture का price बढ़ा as a feedstock for something else. So wholesale price index, whenever there's an increase in WPI, it eventually in theory should reflect in CPI, but with a lag. So
With a lag मतलब?
मतलब with a lag means after some time.
Okay. So basically CPI पहले बढ़ेगा और उसके थोड़े टाइम बाद WPI बढ़ेगा ऐसा?
Well, I mean, it depends. Correlation is not causation. But अगर WPI बहुत जोर से बढ़ा है, तो eventually CPI भी बढ़ना चाहिए. Okay. Although it depends really, because CPI में a large part of it is also food items, which is just decided by weather. So maybe core CPI. Oh, core CPI is another term which we can quickly explain. It is consumer price index in the case of India, but X food and fuel, primarily food. So food का price अपना हटा दिया. It's a measure of real inflation pressures in the economy, right? So actual inflation pressures in the economy are measured by core CPI. So core CPI should, in theory, also rise after some time if WPI has constantly been high. But in the short term, you can have CPI high and WPI low also, which means then CPI should eventually converge, although both converge. So, for example, corporate profit margins are generally high when WPI is low and CPI is high. Because CPI can be seen as a proxy of how much you're selling stuff at, especially core CPI, and WPI can be seen as a proxy of your raw material costs. Okay. But then you can also be rest assured that there's likely to be some mean reversion in the next 1 or 2 years. So then you cannot just linearly extrapolate your profits from there on. You have to be just aware of the cycle a bit, the short-term cycle in this case. So CPI is basically consumer inflation WPI is wholesale inflation. They are slightly different, but broadly they go together. And generally, when inflation rises, you can assume that interest rates, the central bank, in the case of India, RBI, Reserve Bank of India, will increase interest rates. And as we discussed, that may lead to the stock prices coming down a bit. But it really depends, because the actual, as I said, the real interest rate depends, which helps to calculate these stock prices, is not the nominal interest rate, which is the headline, the sticker price of the interest rate, but inflation adjusted. So if inflation goes up by 1%, but interest rate only go up by 25 bips or 50 bips, so less than 1%, then for all we know, for some time, stock prices may even go up, because your real interest rate has actually come down. So it really depends what the response of the central bank is and the extent of the response.
Got it.
But generally speaking, low and moderate inflation keeps predictability in the markets. So it's not just about real interest rate. अगर बहुत high, बहुत low, बहुत variable inflation हो रहा है, it becomes difficult for investors to get a sense of predictability of cash flows 3 years, 5 years, 10 years, 15 years from now. And anything which increases volatility or predictability is decreased, increases the risk premium of any asset class, right? The riskiness perception. And that, other things being equal, should decrease the value of the asset. So low, stable, moderate inflation, along with low interest rates as a consequence, is the best case scenario for an asset class like equities. You don't want to tinker with it too much.
Got it.
In the short term, making it low may increase the chances of a mini recession, like Paul Volcker did in the US in the early 80s. But over the long term, it helps set the stage for a boom. Because then people are like, okay, this thing, we have credibility that inflation will not be allowed to run away.
एंड हाइपर इन्फ्लेशन कब होता है एंड कोई एग्जांपल्स दे सकते हो कि वो होने के बाद क्या सिचुएशन कैसे हो जाती है?
Hyperinflation is a terrible social economic situation when the percentage of your inflation is not 4% or 5% or even 10%. It goes to 100,000, 10,000%.
10,000?
Up to million
Wow.
percent. So basically, a dollar is worth 1 cent in a year. Just 100 times it's been depreciated. So one of the famous examples was Germany in the 1920s. So after the Treaty of Versailles, which is basically the First World War ended, and Germany had to pay war reparations. Basically, आपने war start किया, so plus आप हार गए, तो please give us X amount of money. And for whatever reason, they could not pay that much money, so they end up printing more and more of the currency. They got off the gold standard, etc. And when you start printing too much, and you don't have any control from the central bank to keep the inflation within a limit, it becomes a cycle of its own. People expect it to become more and more devalued, and then it just becomes a self-fulfilling prophecy. At one point, it was not Deutschmark, it was Mark, some other word, R, Rheinmark or something like that. It became so worthless. The people are literally using so many gaddis of the then German currency for heating up their homes, literally putting it in the fire. The only real value of this is like paper only. This also happened with the continental currency in the 1780s in the US, when they had just fought a war with England for their freedom. And of course, it has happened with Argentina recently. It happened in Zimbabwe recently. It happened in many places. Basically, anybody with asset gets wiped out, unless it's a real asset. So if you maintain your land property title, then of course, it becomes much more expensive. Turkey got close to it, but just stepped back recently, and therefore the stock prices went up a lot in nominal terms.
Okay.
In inflation adjusted terms, not necessarily. But if you just own money in your bank account, that basically becomes worthless very quickly. So if you have 1 crore in the bank account, next year its purchasing power may be of 1 lakh rupees. So it's a terrible problem when literally prices are changing every day. For you to a sandwich is worth 1,000 rupees, next day it's worth 5,000 rupees, next day it's worth 10,000 rupees, something like that.
Yeah.
India, luckily, because it's a democracy, that's one of the benefits of democracy, which you don't appreciate. There are many problems of democracy. In a democracy with a universal adult franchise, in a poor economy, no Indian politician can allow hyperinflation or anywhere close to that. The Indian electorate will punish you. Actually, India never got close to high inflation on a sustained basis. Close to double digit for many years, yes, but never beyond that. So we never did default, we never did hyperinflation. As I said, we got close to a crisis in 1991, but then we put out some gold as collateral. We got an IMF loan. We did what we had to do. Manmohan Singh is very famous for that, but more than that, PV Narasimha Rao deserves a lot of praise and credit. Because ultimately, decisions can be done by a lot of technocrats, but it needs the political will of a prime minister to get it through. And so we kind of went to the brink and came back. So India has never had in the modern era any kind of hyperinflation, and let's hope that never ever happens. It's unlikely now. We are even more mature institutionally, because that is one thing which really hurts the financially less sophisticated people who keep money in the banks, who don't know how to invest in assets, retired people, historically more women, etc., etc. It's terrible social economic condition. And one of the key things, the historically people, one of the reasons gold standard was there historically was you were supposed to prevent the government of the day from printing money. Now the problem with that is the Great Depression in the 1930s became so much worse because the US did not get off the gold standard at the right time. Sometimes you have a massive fall in aggregate demand, and without printing money at that point of time, it can get worse. So to have that flexibility, you had to eventually get rid of the gold standard. Although gold, of course, remains a good hedge or an investment, and what was $35 to the ounce in 1971 is now 3,000 plus $3,200 to the ounce. So you can do the math and the CAGR on that. Uh, so it is something that is, how do you, if you don't have the gold standard, what is the next best thing? Next best thing is you have a credible inflation target where you retain the flexibility to be counter cyclical. What I mean by counter cyclical is when the economy is slow or low, you can print more. When the economy is booming, you can tighten the monetary policy or the fiscal policy. So you maintain that discretion in a democracy because that's what a democracy demands. But you need to have some version of inflation target, formal or informal. Otherwise, the temptation for politicians in the short term, even despite their best intentions, can get out of hand. So hyperinflation is something which happens in very poor economies, war-inflicted economies, something that economies are under some foreign control, where they basically print money and just gets out of hand.
Got it. Very, very well explained. Last question, a tricky one. If you were, let's say, the Prime Minister of India, what are like some three macroeconomic changes in policies you would do?
Uh, See, and not to get too technical, but I feel going forward, a 4% inflation target is great, but the 4% inflation target should target something like a core CPI, not CPI, because when half or even if it becomes 40 or 35% of the basket is determined by weather and food cycles and crop cycles, then the kind of slowdown we saw in the last 2 years, 1.5 years, becomes inevitable, right? Core inflation has been less than 4% or thereabouts for 1.5 years now. And the GDP deflator, which is another version of CPI, WPI, not to get into that right now, has been close to 1 or 2% for 2 years. But CPI, because the food cycle was not so healthy for us, the food inflation was high, especially vegetable inflation in the last year or so. RBI could not cut interest rates. I think that led to a lot of pain unnecessarily for a lot of people. Salaries did not grow that much, demand did not grow that much, so capex was slightly lower on the private side because capacity utilization was lower, and that eventually came down to urban and rural demand as well. So that's one. For inflation target is great, 4% number is also fine. Now that we have it, let's stick to it. But how do we calculate it? Let's just be a bit more realistic about it. Second thing is, now that as the dollar cycle comes down, and as more and more FDI and FII comes back to India, this time, thoughtfully, gradually, we should open the outflow also. See, we should trust young investors and entrepreneurs in India to be able to create diversified portfolios without jumping out of India. The Indian elite, so to speak, or the aspiring or rising elite, is not in fear of living in India the way parts of the Chinese elite are. The Indian elite is by and large happy to be in India. Of course, as a much poorer economy, in per capita terms. There's a lot of headlines about people emigrating to US or Canada. Fine, that will continue, including the rich to Dubai or Singapore. But in percentage terms, it's not so bad. By and large, people are happy to create their careers and wealth here in India. So we should trust that over time, gradually. And this time, as we go to $5 and $10 trillion and we get close to almost $1 trillion of forex reserves, we should let some money go out, because some smart young guy in his 20s sitting in Ahmedabad or Surat can do detailed investment thesis on a bunch of chemical companies in America, let's say. I mean, even right now, within $250,000, they can send money apart. But for them to scale up a bit, because you see, even a junior analyst in New York has to be paid at least $150,000. It's just the cost of living there. But somebody here can specialize for $1 million, $2 million for friends and family, and just become an expert in that sector or geography and do very, very well and create alpha and make the markets more efficient. So let's trust the process that Indians, if they invest globally, I understand why we had to delay opening it for the last 5, 6 years, because the dollar cycle on the upside became longer than we thought, primarily because of COVID and then the Ukraine invasion, etc. And if you had suddenly opened up the outflows before reaching even higher forex reserves, there was a small risk of a capital flight, especially when the dollar was strengthening. But when the dollar is weakening and you have more forex buffers, and the Indian market is also booming and the real estate cycle also turns, we are already seeing early signs of that, then you have to be more confident on the Indians being able to invest globally and benefiting from the massive human capital here. So first thing was readjusting the inflation target. Second thing was gradually opening the capital account. The third thing is, again, on the since you talked about macro reforms or macro tweaks, you know, we've copied the inflation target from the West, so to speak. I mean, New Zealand was the first country to do it. America famously has done it. America has 2%. Uh, we have 4%. China has 2.5%, 3%. So one thing we should also do is we should have a real interest rate, or R star, what economists call that. So every second Fed meeting or FOMC meeting, they release a dot plot. They release a paper or PDF file which says what they think in the long term if they have a 2% inflation target, when inflation is broadly 2% and growth is broadly what they think will be over time. What should be the neutral interest rate? So they say, let's say they put 3%. That means in real terms, for a normal macro environment, it is 1% in inflation adjusted terms. What that does is, it tells you that when the economy is slower than general, then your interest rate should be lower than your neutral rate. We copied the inflation target. We did not copy the R star concept. We did not use it or modify it or internalize it. And what happened in the last 2, 3 years was, despite GDP growth rate, especially in the last 1 year, coming below what we thought is our normal potential, we did not cut interest rates, because what we do is, last CPI number came high, don't cut it or increase it. Last CPI number came low, cut it or keep it stable. We only react to the last number. We don't react to what the current level is. The current level may be high even if the current inflation number came high, right? So your interest rate has to be in conjunction with what the economy can tolerate. So what I mean is, with a 4% inflation target, despite 2 cuts, we are at 6%, which means if this is the normal, is India's R star or real interest rate 2%? Probably not. RBI itself has guessed it to be 1.5%. When we had a 5.4% GDP number in quarter 2 of FY25. In that case, we should have cut interest rates a bit earlier, even when CPI was on the higher side. Now, these things sound very technical, very academic, but they have real world consequences for millions of people. In fact, my personal guess is, if the monetary policy was not so tight, even the 2024 general elections would not have been the way they had gone. I mean, BJP may have won a simple majority instead of a coalition majority, but that's a separate discussion. I think despite one of the reasons they did not so well as they expected was too tight a macro policy, which, by the way, was also the case in 2019. But 2019, a couple of months before the election, the whole Balakot thing happened, and there was a different kind of vibe in the air of course, there are other factors as well. So I think macro policy, we need to be very sure that we don't become too adventurous. At the same time, in the name of being responsible, we don't become too tight, too Calvinist, right? That just tighter is always better, more strict is always better. No, this is this. Remember, when you have higher interest rates, who are you helping? You're helping those who are retired, those who are older, and those who want risk-free returns. Who are you hurting? You're hurting the younger people who want to take a home loan, who want to take an MBA loan, who want to start their lives and families. So, too high interest rates is basically a transfer from the young to the old, to the risk from the risk taking to the risk-free guy. And as a young country, which is absolutely brimming with entrepreneurialism, we cannot afford that. So at the same time, I'm not saying we should have very loose monetary policy. The extreme end of that would be hyperinflation. I'm very happy that we have an inflation target. I'm happy that we are being very conservative, but we should be very careful not to overdo it, because that has real life consequences of millions of people in terms of salary increments, in terms of joblessness, in terms of lack of new businesses opened compared to what could have happened, because we only have another 20 years of demographic window. So, while I am extremely bullish on India, nothing can be taken for granted, right? Nothing is predestined per se. There is an element of what we also have to do right. But it's a relatively small thing. Broadly speaking, I think Indian macro has been well handled. On the fiscal side, we've, controlled the deficit. We can discuss on that also separately, because a large part of the fiscal deficit is actually the primary deficit plus interest payments. So if you have too high interest rates, your fiscal deficit goes high also, because the government is paying interest on its debt at a rate effectively controlled by the government, not the government, but RBI, right? So if you have 80% of debt to GDP for the union government plus state governments, and you have a 7% rate of interest on that, you're effectively paying 5.6% of GDP as interest every year. If that 7% becomes 5%, let us say, you're paying 4%. So 1.6%, of course, it does not happen overnight. New debt has to be refinanced, etc. But that 1.5% gap can be used for defense, can be used for education, can be used for building roads. So if it makes economic sense, then keep it that way. Because very little of the Indian debt is owned by foreigners, despite this bond inclusion, 2-3%. So long as does not upset the macro cart, it's easier said than done. When the dollar was rising, you could not be too adventurous. But this 1.5% of GDP can make a huge difference. Without raising taxes, you can spend on much more important things. It may not be 1.5%, it may be 0.5%, but even 0.5% of $4 trillion economy is $20 billion. $20 billion is much more than your NREGA program even today, for example, right? Or out of a $80 billion defense budget, maybe only $20 billion goes for capital acquisition. The rest goes to salaries, pensions, or some pre-signed armaments anyway you're contracted to buy, etc. Imagine what you can do with $20 billion in defense indigenization, in green energy transition, which helps India to import less oil, or investing in human capital in terms of public health, or in terms of targeted higher education interventions, etc. So all of this matters, but again, this is just three specific things you asked. But by and large, I think Indian macro is in very good shape, and you cannot really quibble with it beyond a point. I want to end by saying that by and large we are doing okay.
So वो interest rate जो है आपने बोला अगर 7 का 5% कर दिया वो किसके हाथ में होता है? Who decides?
See, I mean, technically RBI decides the rates, okay, right? So my point is, there is an assumption that if you go from 7 to 5, inflation will spike.
Yeah.
But that may not be the case all the time. Again, there are always second order effects. If you actually cut down rates, because the point is demand may spike, but maybe supply will increase even faster than demand. Because demand spiking may create new capacity, and given people's belief in India's growth curve and trajectory, maybe supply rises much faster. Right? So it's not as linear as it may seem initially. And I'm just giving you round numbers. It may not be that extreme, but even saving 50 bips of GDP, as I said, is $20 billion. And if we are overpaying effectively ourselves, who are we overpaying? We are overpaying people, bank treasuries. Effectively, you're cross-subsidizing people who are well off. People talk about pensioners. See, anyway, pensioners, you can give targeted tax incentives. But anybody with more than 30 or 40 lakhs as a 60-year-old in India in the bank account, or 1 CR or 5 CR, whatever, a real estate plus bank account, is anyways part of the top 2 or 3%. I'm not saying we should not be respectful towards the constituency. We have to make sure they are taken care of as well. But at what cost? At the cost of 8-9% mortgages, as opposed to maybe 6 or 7% mortgages, at the cost of a business loan being more expensive, or MBA loan being more expensive, at the cost of an industry loan, which creates capacity and jobs being more expensive. So the cost of capital is a real cost in the economy. Just because it looks more abstract, people tend to forget about it, but it's a very real cost. And the question is not to overdo it, not to underdo it. Just to think more carefully and systematically, by measuring CPI well, by having the right capital account policies, and by making sure that we also have some view on what a real neutral rate should be. उसमें problems हैं. It is not easily understandable. It will never be precise. But just because something cannot be precisely measured does not mean the concept is not valid. So very, very smart and respectable people who I personally respect a lot disagree with me on this, for example. But this is something, these three things is something I would work on.
Got it. Thank you so much once again for doing this. I think I really enjoyed a lot. Learned a lot of new things as always. Whenever I interact with you, बहुत सीखने मिलता है. And I'm pretty sure everyone is going to love this, and of course they're going to gain a lot of value. Thank you so much for doing
Love
this.
being on your podcast, Kushal. बहुत मजा आया. Thank you.
Yes, thank you very much.
Oh, that is hilarious. Perfect.
अगर आपको ये वीडियो पसंद आया होगा तो आई रिक्वेस्ट यू टू शेयर इट विद ऑल योर फ्रेंड्स एंड सब्सक्राइब टू आवर चैनल सो दैट वी कैन गिव यू मोर वैल्यू एडिटिव कंटेंट इन द शॉर्टेस्ट अमाउंट ऑफ टाइम. हमको ये बताइए कि आपको कौन से काइंड ऑफ गेस्ट चाहिए. हमको ये बताइए कि कौन से क्वेश्चंस मुझे नहीं पूछने चाहिए थे, कौन से क्वेश्चंस मुझे और पूछने चाहिए थे ताकि आपको और ज़्यादा वैल्यू मिल सके, और कौन से ऐसे पार्ट्स हैं जो आपको बिल्कुल पसंद नहीं आए ताकि हम लोग ये पार्ट्स ट्रिम कर सके फ्यूचर एपिसोड्स में. सो थैंक यू सो मच वंस अगेन फॉर वॉचिंग दिस एपिसोड एंड कीप शेयरिंग ऑल आवर एपिसोड्स विद योर फ्रेंड्स एंड कीप गिविंग अस फीडबैक so that we can improve and come up with better quality content.